if we get to what I want to go over today. And we are officially recorded. Let me make sure. Oh, someone's got some noise. Oh, there we go. I just saved us all from the horrible, horrible sound of whatever that was. I have no idea, but something. Okay, so first and foremost, is anybody brand new on this call? Is anybody brand new to the group that I need to know about or wants to say hi and welcome themselves? And
how you doing, Jenny? This is Dario.
Dario, that's a cool name. I like that name.
Appreciate you. I've been on the group for quite some time. You know, I just kind of been listening, taking it in. But it's my first time introducing myself. How's everybody doing?
Wonderful. Well, welcome. Thank you for introducing yourself. I like your name. That's unique. It is. Well, how are you doing? How's it been going since you got started?
It was back and forth. You know, I was just getting in my own way. I followed the directions a little well, but you get caught up in the quick wins and you start over leveraging. So the past few weeks I had to just take a step back and just slow grind, and I've been having good success.
There you go. Well, I like your self-ownership. We don't get enough of that. So for you to acknowledge that, it's a process that we have to go through. I mean, that says a lot about who you are and a lot about where you can go with that kind of mindset. So that's awesome. Well, welcome. I'm super glad you're here and thank you for stepping up. So let's go ahead and get started real quick. I'm going to go make sure I got my chat on, maybe, potentially. There we go. I got it on. So Sky says, I'm new. I'm Darlene. My name is not correct, but I've been joining the group. Hi, Darlene. I like your name too. And Sky is Charles. So if you want me to know you or talk to you like you're your own person, your name is really helpful. And it's also helpful for Miss Donna, who has to go through and manage all this. And her job is just never ending. So please, please, please make sure you put your accurate name in there. It also just creates a personal kind of real environment versus just like an internet forum with, P. Diddy money bags and all the other really random, funny names we've found along the way. So that's my advice. If you know how, if you don't know how, I'm sure somebody can help you walk through it. It's fairly simple. So, but here we go. We're going to go over all the information that we need to go over. And there's a few names on my desk. And I went ahead and I put my trade manager, a version of the trade manager onto the account that we usually use for this call. So I can kind of show you guys what I'm seeing and why, when we stop over managing, when we stop overthinking, what's possible. Now, there's still going to be a few things. Actually, I'm not going to go there because if I go there now, I'm going to stay there. So I'm going to go here first and do what I'm supposed to do. So first and foremost, I'm not your attorney. I'm not your legal advice. I am just another person on the other end of this call, kind of going over information with you. Scott is not legally liable for the ATM and the discussions we're going to go over either. Again, it's just a tool, and how you use that tool, it's just a matter of it's still a very much you equation. So please know that this is a high risk activity. It's an independent activity. So you are responsible for every decision you make. So order of operations, we're looking for a couple of trades. Most of them have been popping off slightly before New York for the last week or so, or maybe even a little bit longer. So sometimes we find them, sometimes we don't. So which makes this more of an education call than a signals call. And that's okay in between. So you guys don't want to only be professional signal takers, although it's nice. Once you let go of the stress of it and the worrying, you take a signal, you make your money, and that's all you want to do. That's great. And some people are wired that way. And as long as you have good rules that go with your signals, because you still need good rules for that too, you can technically make money. You can make part-time money doing that. So, but this is meant for more ownership, more self-involvement, more let me see how I can take all this big basket of accumulative theoretical knowledge and see things in a way that my eyes and my brain sees things to become successful to where you are in Bora Bora or maybe in the Bay Area, looking at some stars. Then you can still take your trades. You can get your alerts. You can know what you're doing. You can, trade for a few hours in the morning, in London or in Bora Bora. So that's the whole concept of that freedom. If travel's your thing, if not, Maybe you work for a few hours and you get to go donate your time, you get to go work out, you get to go donate your money and make a difference, or you get to go shopping if that's your thing. So that's the whole concept of any of this. You can still do really good, whether it's education or whether it's signals, but it still is going to come down to you kind of growing and evolving along the way. So it's your responsibility to manage on lot size, trade manager, trailing stops, take profits, all that stuff. Bottom line is, across the board, go test this strategy, go test other strategies. And for the most part, your stop loss should be at or above structure, or at or below structure if you're buying or selling, depending on which one you're doing. And if you're looking for the safest, most, okay, is this trade correct way to trade? That's it. Now, it's sometimes that's way too much room. Sometimes that stop loss is way too large, which means we have to get over ourselves and skip the trade, or we need to take the hit, because the more we micromanage and the more we manipulate and play with these, the less success you're going to have in this industry. This industry, Scott said it the other day, you're paid to wait, and that could not be more true. You are paid to wait. You're paid not to trade, and you are paid to stop touching the trade once you decide on the trade. Both things people often forget, and I think that whole, hey, we're paid to wait, I found a good trade, now I'm going to micromanage it and get knocked out. I don't think that side of it is talked about often enough, because even once you find your trade, you're still paid to wait and not to overact, overreact, and fiddle with everything. So let's see, in general, we're going for about 10 to 15 pips. For GBP USD is a great pair for this strategy. It's a great pair for multiple strategies across the board, but either way, it's really, really simple. It's very good. It's the appetite for risk is you can have a smaller lot size and you just have a little bit more peace of mind for those people who can't comprehend yet the leverage and the movement of the indices. Man, GBP USD is just amazing. And then gold, of course, is that middle ground. So on anything that's not an indice, you're looking for about 10 to 15 pips. Often there's room for more, but it doesn't mean you have to go for that. So that's totally up to you. On an indice, I'm looking for about 200 to 300 pips personally. That's kind of like my bottom line. Hitting 300 pips on US 30, even when you turn out to be wrong, tends to be effortless, if you're asking me. But that's my opinion. So even on NAS and German 30, which don't move as fast at all, but German 30, getting your 20 pips out of it or 200 pips is still very, very possible. So best practice. Now, this is obviously in conflict with what we just talked about. And it's in conflict further still with what we will talk about on today's call. So best practice, if you're looking to stay tight, if you're looking to, if you know yourself and you know thyself according to the Latin, thing, but you're going to tamper with it, then have a rule that says, I can only tamper with my trade if. I can only second guess my trade if. I can only jump in and jump out of my trade if. And if those conditions are not met, you do not get to do that. And at least it puts a rule and it puts some restriction on the psychology and on that feeling emotion that goes into being in a trade that's either winning or losing. We tend to tamper with them both equally. So one of the solutions for that is voluntarily close your position when the 3 EMA crosses and closes on the opposite side of the 50. You can also choose to say, hey, if the fast MACD and the neutral line switch directions, I'm getting out. If the trade is in the drawdown, you can say if the fast MACD crosses the slow MACD and I'm winning the trade, right? And I want to catch the most, largest part of this move. I'm going to say, okay, so when the fast MACD crosses that slow MACD and the slow MACD is larger, then I will exit my winning trade. So there's a plethora of things you can do. And last but not least, if you are taking re-entries and that price, so candles, when we say price, we mean candles, crosses and closes on the opposite side of the 8 EMA or the 9, if that's what you have on your chart, then you're going to get out of the trade. So you have plenty of things that you can say, hey, if these conditions are met, I will get out, I will tamper. But if these conditions are not met, I do not have a reason to tamper. Because the more we tamper, the more we will just have those, we're spinning our wheels, we're walking on a treadmill and not getting very many miles. So last but not least, best practice is going to be able to create a manageable personal budget. And I really say this mostly because of business mindedness. I feel like we jump in this industry as well as many, many others. And we just jump around. We come in, we quit, we try something else. We do this, we quit, we try something else. well, first we're going to sell Mary Kay and then we're going to do this. And some of you guys are serial entrepreneurs. Some of you guys have tried multiple MLMs. Some of you guys have tried multiple streams of income 1,000 times, and there's nothing wrong with that. The blessing and the curse in terms of Forex is that instead of having to jump industries, you're telling yourself that you're not. So you really are. So if you're jumping brokers and strategies and account types and account plans and this and that and news and sessions and indicators, if you're constantly, well, I'm going to try a new broker. Oh, I'm going to try this. I'm switching all those things all the time. You aren't doing any one thing long enough to get good at or perfect anything. It is no better than somebody who goes through life and they've tried one company and another company and another company, and they have gotten effectively nowhere. So I just wanted to throw that out there today because I'm sorry, but I wanted to throw that out there today because I feel like that is just this inside of this industry. We have a lot of jumping around that we can do without having to, say we quit Forex. We can still, essentially quit 1,000 things inside of Forex and not having quit Forex. So best practice is create a plan that you can stick with for a year. So create a plan you can stick with for 6 months, for 2 years, and consider the fees and everything you go through, your tuition to Wall Street, your tuition to be self-taught, to become a self-made 6-figure income earner or whatever it is, or multimillionaire. I don't know what your goals are. And do this in a way that your budget can afford it. So if that's, hey, I can reload my account, $100 every 2 weeks or $200 every 2 weeks for your kind of fast growth, super high risk, I could blow this account. And then obviously your safer account should probably be more than a few $100s. But this is what I pay for this. This is what I pay for that. This is my Trading View membership. This is my VPS, or this is my my SuperEZ membership, and this is what I can afford every month. So now I'm going to do that. I'm going to take all the stress out of it. No more drama, no more jumping, and stick to that and stick to something long enough that you can actually get good at it. Because if you're going to be here for a month and then you're going to try another indicator and try another broker and try another plan and try another this, you're going to fail. Ultimately, you will fail. Sorry to be a little direct, but that's that. So no, don't worry about holding all questions. We're pretty open and transparent in here. So the next few slides, so we can get moving forward, is something you can take a screenshot of. I'm not going to verbally read every single one of them. I am going to take a little drink of my coffee while that's up, and then I will change the slide. I just made it, so it's hot and it's very, very full. So those are the indicators we use. That's pretty much everything you need to know. Now, again, people use tons of variations, and that's okay. Ultimately, your eyes need to see it. So strategy, this is the strategy. It's not super complex. It's not even that fancy. And I don't even think it takes this sentences to explain it. But once you get it, you get it. And it's really, really easy to follow. You can follow this on multiple time frames. You can do dual time frames. You can do single time frames. You can do so much. You can take 5-minute entries in line with the 4-hour biased. I mean, your options are endless. So are we waiting for it to open or join as a host? Somebody's having a hard time getting in, maybe. I don't think he needs to join as a host. It should be open. So does anybody want to volunteer to help Ronald, pretty please? And he's in the Way the People group asking questions about how to get in.
I'll take a peek in there and see what I can do.
Thank you. I appreciate it.
Thank you.
Thank you. So last but not least, this seems to be my strength. I don't feel like I have any better superhero, super guru, super goat strategies, or I don't think I avoid losses. I don't think that I have the magic key. I do think I'm capable of doing something 50 times the same way. I do think that I'm capable of seeing an idea, back testing my idea, gaming it out, writing it out, and then actually doing it. And that kind of, I think, is what breaks down the reason some of us are having success and some of them are not, is that alone. That one quality trait is I'm not going to just freak out because I had 5 or 6 losses. I'm going to stay the course until I have completed this batch of trades, and anything less is just playing, nothing more. So This is something else you could take a screenshot of. It sounds simple, but it's everything you need to know. So any questions, comments on any of that stuff? Let's see. Anybody at all? Okay. Well, in that case, while we're looking for a trade, I am going to show you guys and kind of talk a little bit about something that I'm hoping is caught. Some things are taught, some things are caught. And if I have my way, this will be caught. So it's the best thing that you can possibly understand and kind of feel. First thing we're going to do before I do that is go over the structure of some of our indices. So we knew that we drew this blue line last Tuesday, I believe it was, or Thursday maybe. It shot up. We said if we broke, we had a huge room. It played out kind of perfectly. I'm not going to delete all that mess of lines. I just want to see how they're honored or not honored. That's my personal opinion. So yes, it's a little messy, but I think we can still kind of get the big picture of what's happening here. So you see this beautiful kind of pattern down here. Some of you guys know that that may be that head and shoulders. Definitely think it qualifies. I'm sure somebody may see it slightly different, but I think it definitely qualifies. So we've officially fulfilled that kind of amount of room there. So from that formation, we've already fulfilled that. So now we've got this huge drop that we're seeing now. So now I'm going to go back and zoom in, and because we're not trading on this time frame, we know the market is dropping. This nice engulfing candle, we've already retested 50% of it. So everything in us when we're on that baby time frame says, oh my gosh, I don't want to sell it because, you know, it's already made this move and it might be done selling. True, that is true. We're bouncing off of the 50, the 4-hour 50. So that is absolutely true. But we're moving down. So when we get sell signals, we should probably trust them. We should probably go where the market is going and not try to have our own, hey, we're waiting for the buy. You've done that. I know there's a handful of people on this call who can, you know, be on the same page as me when I say I've done that a whole bunch. I refused to jump in this massive buy that kept going because I was waiting for the sell based off of my opinion. And that opinion is literally, it means nothing, yours or mine. We're just trying to go where market goes and go with it. So if we keep that in mind, we keep the main thing, we'll have a lot more success. So having said that, let's pop down to the smaller time frame. Let's see.
Jenny, can you go back to the 4-hour once quickly?
There we go.
That is the 50% retracement
Already
of
done.
this move.
And do you have Fibonacci on yours?
Yes, 50% fib.
Nope. Gotcha. So then we can pop back up to like the 61.8 or whatever. But how this one doesn't even hit a measured move, does it? This one candle.
No, that's not any kind of major supports on the 4-hour. It comes close to getting back up to the 38, but not quite. You know, it's within, you know, a few tens of pips. You know, as it's hard to say within a few pips.
Okay. So we haven't retested that. So if we've already hit the 50, we could push down to the 61.8. That's kind of the theory, right?
Or we could push right back up. What I'm saying is not 50% of this move. I'm talking about 50% of the big move on the 4-hour.
Yeah. Well, hey, is this the 61.8 or pretty close to it?
I'm sorry, where?
11711.
61.8 is considerably lower than the ADR. It's going to be close to this level right here.
Okay, so here's what we're going to do. I'm going to right click on that line.
I'm sorry, that's wrong. This right here.
Gotcha. Okay, so I'm going to right click on this line. That first one, as I just make my mouse go crazy. I'm good at that. So this one, I'm going to change the direction, the color of this one, if it will let me. There we go. We're going to make that pink. So as our target, if we do keep making a lower low, that would be the next target, right? And if not, okay, if we do get the push to the upside, because we are kind of consolidating on that 5-minute, 1-minute, 15-minute chart at this point, we know kind of where we're going. I'm guessing the 31.8 is somewhere in here.
38.2, you mean?
38.2.
It's just above, it's like in here.
Well, that's too close for my taste. So that kind of that retest right there, that's a little close for my taste, but we'll keep that line there just for, you know, Fibonacci purposes. I don't use Fibonacci, but if you guys do, it's a really great tool. I see it adjust, so I see it differently, but for a lot of people it helps. So, and it's measured numbers, and numbers don't lie. So,
well, here's the thing though, you know, the reason it works is that a lot of people use it. It's like so many things, you know, what's more accurate, a 50 EMA or 50 SMA, whatever most people are looking at right now.
the perception.
Yep.
Well, there you go. That kind of gives us something. So if I go down to the smaller time frame, thank you. And we do get this break kind of above the trend line. That's enough room. It's not a lot of room for the counter trend trade. Yeah, that's enough room. That's 700 pips. So that's where your target would be. It would kind of make sense below this level of structure, because that, look, if we look to the left, see the fractals there. We don't want to be kind of stuck in this box and just say that box is our target. A lot of people do that, but we want it slightly before. So, and same thing if we're getting the sells. So I'll kind of double click. I'll have to make it ugly though, so we can actually see where we're going. First target is ADR low. If it breaks from there, you know, we've got that trend line we drew last Thursday. It respected super perfectly, but it's still valid as a potential level of structure. I mean, if you trade that way, you'll kind of see this big mumbo jumbo mess you create on your screen. But then as the weeks go on and you build on it, you're like, whoa, wait a minute. I'm actually seeing market fluidity. I'm seeing the market move, and I'm not wrong. My management stinks and my rules stink, but I'm not wrong. And once you realize you're not wrong, you can actually play with your rules and your management. So there you go. That's kind of where we're going. If we do break those, that to stay with the sell, if we do get the continuation and break these trend lines, obviously that would require another signal on our little strategy. Our first target is what, 500-ish pips away. Let's find out. I'm going to measure a little bit lower because time will have passed. That's 700-ish pips. And if we do get to the next Fibonacci level, I don't want to say it wrong again. As you guys know, I don't use Fibonacci. That's a whole bunch of pips. So that's almost 1,800 pips to kind of go drop down as a target. So once you see that, you'll have a much better understanding. So that's NAS and kind of what we're looking for. It does look like we get a double bottom on the very small time frame for German 30. So I'm going to go to German 30 next. German 30 here, let's close that out, make it super crystal clear. Our structure chart, huge drop, and we have not really given any of this back yet, at least not enough. So I don't know if Scott's got his fibs up here, or maybe I could put my fibs, but that's 3,000 pips. So half of that, well, actually 3,500 almost. So half of that's almost 1,700. Okay, that's a lot of pips that we still have not given back yet. So to potentially say, okay, this has some room to push up and you've got a double bottom, waiting for our little strategy to give us that signal, absolutely. But that's kind of what we'd be looking to see. Now, we might not get the reversal. We might not get the counter trend trade, but that's kind of what I'm seeing in terms of this pair is the potential to go up. That double bottom is looking, there's no divergence on it though. That's, for those people who use divergence, there's no divergence saying you should buy, but you do kind of have this slightly uneven slanted double bottom. So for now, maybe 500 pips. If we break up to that 700, well, 1,700-ish pips. Same concept. If we break the trend line to the downside, which we're going to play around for a little while first, we want it to break this trend line, and our next target is going to be quite a bit lower. So there's not a lot in between. But again, trying to sell here without any form of a bigger retracement is you're just potentially getting into these baby candles that eventually do have to, retest. It has to pull back. It has to breathe a little bit. So this could be the breath. We don't know for sure because that is a perfectly smooth London made some money kind of drop. So just bear that in mind. Anybody seeing anything different on German 30? Anybody catch that move on German 30? Most importantly. None of
Jenny, I caught it. I caught it just morning. London session.
Did you really? Oh,
Yes.
how many
Yes.
did you get?
It was 800 and something. I was in demo though. But yeah, I caught 830.
Okay,
Pips.
830. Well, remember that skill set in demo is the same skill set that can pay your bills.
Yes. Yes.
So that's awesome. Good job.
Thank
I
you.
caught some of it as well, Jenny, in the London session.
All you guys in your London session, I'm at the move across the pond, huh? Way to go. That's awesome. Okay, well, I didn't catch any because I was sleeping, but good job on those who did. It's kind of a beautiful, kind of perfect move, if you will. But anyways, I did not catch that. So here's London session, beautiful, kind of perfect drop. It does pay to think that, okay, this potentially could reverse, but we don't want to be the foolish trader who's waiting on something or the market to give us something that it's not telling us it's giving us. Now, on the other hand, US 30 does have divergence. And for those of you who know what that means, it means the candles are doing something than the oscillators. And that's an indication that, so the books aren't balanced, is the way that it was explained to me in simplistic, very layman's terms, is it's not balanced and it needs to rebalance. So that's why you get a retracement in and around the places you have divergence, as when the oscillators and the indicators are not doing what price is doing, there's an offset and that needs to kind of be reset. So how true it is, well, again, like anything else we discuss on this call, it is a theory and it is not written in stone, but US 30 does have some beautiful divergence. If you see right here, this price is going this way, and on our MACD is on any of the other oscillators, price is going this way. So I'll maybe.
And 30-second warning and opening bell.
So don't jump in a trade just yet. Let them kind of decide, and then we'll go from there. So last but not least, let's take a look at GU. GU made a beautiful move also, and I was sleeping. So I was sleeping for that move. I did not catch that, unfortunately. I've been doing very, very well kind of catching the GU moves. So we finally touched the ADR low. We're at this level of structure to the left. I'm going to go zoom out a little bit, if it will allow me to. I don't know why it does that. It just gets super temperamental. Try that again. So my computer said no. There we go. Now, if we look to the left, guys, we've got a whole bunch of structure in and around this area. So what we do at this point is we have to kind of wait and see. So if that's where price is at in and around, remember, not a straight line, but in an area, so to speak, we know exactly kind of where price is, what it's going to do. We know that it's going to have some form of a bounce potentially before we get the continuation, or it's going to reject hard and potentially come up, and retest 50% of this move. So that's what we're looking to see happen. But in this area, we don't have a signal. And we don't have any reason to take a trade at all. So there's that. Does anybody have any questions on any of that stuff so far? Okay. If not, I'm going to go ahead and go to German 30. So German 30 is going to be the pair that I leave up for the moment being. Again, it looks like it has the most potential personally. So that's what I'm looking at. For those of you guys who don't know, I'm going to place a pending order in and around here. Okay. So in and around that 12691 level, and I'm going for about 500 pips. Okay. That's what I'm doing on German 30. That is a counter trend trade that is against the grain. So you have to decide if that's what you want to do, but that is what I'm going to be doing. So now that we have that up and clear, let's go ahead and go to German 30 on our actual strategy. So you can kind of see this double bottom formation. You guys can kind of see we're touching the 50 right now. So we do need to be careful. We don't have a next higher time frame signal, and that's okay. If we go to the single time frame current, we should be getting one here like in a matter of a few candles if everything continues to move the direction it's moving. But as of yet, we don't even have a current next higher. We wouldn't have a current either. But I did want to show you guys this to kind of show you what we were looking at. If price comes in and around this area, that's our first target. And there you go. That's plenty of room. So if you're looking for the safest entry on this double bottom and you're not timing bottoms, you've got in and around here. So this zone itself is, approximately 600 pips. Very, very safe, very, very easy to trade. Not a lot of drama, not a lot of stress. So now I'm going to go down to the 1 minute time frame, and there we go. We still don't quite have that single time frame entry. We'll start at a 5 minute entry, but on a single time frame, this would be our entry in and around here. For those of you who are trading the 1 minute time frame or the other time frames, this is it. That's already 300 pips up from where price, the 3 crossed the 50 and the fast MACD was in a line and the ADX was in line. That would be a single time frame entry already done. And then over here, of course, it just works out kind of perfectly, super smooth. So getting that push up. If we get the retest, we'll get a nice little entry, hopefully on the 1 minute, so we can have the tightest entry, but we'll see. We will see. So this is a pair I'm focusing on, if that's okay with everybody.
Can you go back out to the 5 minute, Jenny?
Absolutely. Show me.
Just want to point out, as you pointed out, there's a double bottom. We've got a center structure that sits up in here, and this is often a target for a measured move. So you can expect a movement maybe up to here off of a double bottom like that.
So that's why I was saying 50 pips. If this is about 500 pips, then our target would be about 500 pips for a measured move, right?
Right.
Thank you. Yeah. Well, wait, would you measure?
Yes, somewhere, if you look at that, you've got a push down and a push right back up in this area here. And so I would consider that to be kind of a wick. And, I'd say that, to count the double bottom broker, I've drawn that line. That would be about right. So, these things are never precise. They're, pretty close.
How I have it measured is kind of like that 500 pips. I agree. So we're not like looking to catch we're not looking for everything. We're just looking for that middle range. So if this is approximately, we could go a little bit higher, but getting 500 pips out of this is very, very, it's easy to do, reasonably easy. So now the hard part is going to be, go ahead.
It'd be a happy circumstance.
Yes. The hard part is going to be being able to manage that and not kind of overprotect because you're scared, overmanage because you're nervous, and then overtouch because you're a fiddler and you're touchy,
And price is going to react up here.
So I'm going to keep it on this time frame. And well, actually here, I'm going to keep it on this.
No, that's fine.
And talk for a while. So as soon as we get an arrow on the 1 minute or 5 minute, for any of you guys who are watching that chart, please do let me know just in case I miss it. But I'm looking to see price maybe pull back a little bit or for us to get our arrow. So this was single time frame. We should be getting our next buy signal. And either way, if we break this, that's a structure-based trade. And it's not wrong. So this is kind of our entry in and around here. You can be a little bit less tight. You can say, okay, now that we've broken that, I'm waiting for a bearish candle to give me a slightly tighter entry. Then I'm going to take it. You've got a plethora of options. So while we're waiting on this to play out, I'm going to talk to you guys for a minute. So couple of things. Yesterday I was at the little beauty salon, and she's my friend. She's becoming my closer friend, actually. She's this beautiful Vietnamese woman. She's just so awesome. Her sense of humor, her sense of business is second to none. So we go in there. She does my nails. Well, her business that she runs does my nails, my toes, my eyelashes, and a couple other things. So, but they do everything, right? And she's talking and talking and talking, and she's talking about perfecting the process of what she does and how it's different for each client, right? And I know it sounds silly, and I'm just reiterating this, but she said something, and I of course busted up laughing because that's who I am.
I've seen people told, so it would be different.
You have no idea, but especially with the more expensive, high-end stuff like the facials that are $200 and stuff, you're not going to do the same thing. So she's talking about training, her other people, because she right now does all the bigger stuff for the company. And then, of course, all the technicians do the nails and the other stuff. So we're just yapping away. But she says, of course, and she's Vietnamese, so you can imagine her action. And she speaks very well, but a little broken English. And she says, okay, so 4 + 4 is 8, but sometimes you have to add 1.5. She said, yeah. So 4 + 4 is 8, but sometimes you have to take away 1. And then that's what works. And when you say it like that in a little broken English, and it just, some things are caught and some things are taught, it really made me realize that when we're teaching this strategy, yes, step 1, step 2, step 3 is, it works, right? It works across the board, but sometimes you have to add one, you have to take away one. And there's all these other variables that's where people are getting stuff wrong, is getting stuff wrong. That's where people are losing trades. They're spinning their wheels. They're just, fishing in the dark. That is what's happening with most people, is they're, well, I did this, and they're very concrete, and they think that what they're saying is making sense. I've done it 1,000 times. As you guys know, I called VP, whatever his last name is, VP Morgan, for like a year. So you didn't know what you don't know, right? And we go through life not knowing what we don't know. So it sounds really simple and it sounds really silly. But if you guys can understand that when I go over what I'm going to go over next with the trade manager, and when we kind of go over this information, yes, that these are the rules. Yes, these rules work. That's how you do a facial. These are the steps you take. But everyone's circumstances, psychology, emotions, time of day, pairs you trade, account balance, appetite for risk, and the other thousands of things I don't even have enough breath to list. Every one of those variables are strong enough and important enough that you need to know when to add one. You need to know when to add none. You need to know what steps to take, when structure matters, when structure doesn't. You need to know when news matters and when it doesn't. You need to know, what's trending on the higher time frames, the ATR of a pair. There's so much added information that if you guys can really grasp that, yes, these are the rules and these rules work. And they work pretty darn well. I mean, we're on German 30, so I don't want to move too much, but even a single time frame entry, can you get your 20 pips? Well, 200 pips on this pair? Yes. It doesn't always move this smooth. Sometimes it definitely does not move this smooth. But even on these baby moves, knowing when to take them and when not to take them, knowing what conditions, silly me, need to be met, it's fairly simple and it's fairly accurate. So it sounds silly, and I don't know if that helped anybody, but I'm hoping that some of you guys realize that yes, 4 + 4 is 8, but sometimes you have to add 1.5 because
No, that's 100% accurate. And it's kind of funny that you're saying this, because yesterday I saw something, it was a little comic, and I read it and I thought, wow, that's actually really cool, because it was 2 characters and they were talking, and one of them says, oh, I'm a baker. So the other character responds, oh, that's great. That must mean that you're so creative and you've got all these ideas and blah, blah, blah. And then she kind of laughs and she just says, well, actually, I'm not really great at creative stuff. What I'm really good at is optimization. And then she made a gesture with her hands and she's like, there's this recipe and I got this recipe. I've made this recipe. I have ideas about what works, but I have to keep changing little things to make it the best recipe I can make it, because I know what the end result should be, but just following that original slip of paper I got isn't enough. And he said, oh, so you're not so much a baker as an optimizer. And her eyes lit up and she's like, yeah, I'm an optimizer. And I think that's kind of the idea, that you get a set of instructions with whatever you do, but there's also this part that you have to come in and sort of say, okay, well, these are my deficiencies. This is what I'm really good at. This is where I struggle. And it's sometimes a whole bunch of unspoken stuff. And it can really make you feel alienated or confused. Like, well, okay, I don't hear this coming up as an issue for other people, so I don't know. But you kind of have to keep tailoring it and modifying it so that you can get that end result, but you get the best version of the end result for yourself.
And then actually your story was probably a little bit more clear than mine. But yes, exactly. That's exactly it. So like, I think that most of you guys who have talked to me for a year, who have gotten to know me, most of you guys who have heard Scott, I'm on here, you can tell I am an optimizer. So I'm going to take this information and I'm going to optimize it for me. Like for me to best see it, for me to best use it. I can't agree with everything and I can't like everything. I can't use everything. But I'm great at optimizing it. B, the lady I was referring to, she takes all these cool treatments that come out on the market. She goes to all the trade shows and finds out what's best. And she optimizes the process and the program and all the cool tools and gadgets and ideas to get results for her clients. Because she doesn't want to just do, the crappy job. I'm not talking like nails and stuff. I'm talking the other cool machines that do all the, you know, freckles and everything. So she does the best. Scott, he takes these indicators and this really detailed, specific knowledge, and he optimizes it to be more coherent, to be very practical and just very useful. So that, yeah, if you guys want to know, you want to have a job title and that actually is accurate, you're not just a trader. You're trying to optimize yourself. You're trying to optimize your system, your rules. That's it. So your story was a little more coherent, but same thing.
No. I like your story because it's the same idea. I think everybody has certain things that they, you know, whether it's your mechanic, your hairdresser, whatever, but we all logically know, hey, this is a person with a 10,000 person career. There are 10,000 other people that have this career. But what makes you keep going back to this one person? You know, unless you like your hair being cut up terribly or your car breaking down as soon as it leaves the garage, there's something that person does that you're like, yeah, even if it costs a little more or takes longer or they only work Tuesdays through Fridays or whatever, this is the person I go to.
Amen. That's the truth. I go to them mostly because they're awesome. And that she is so kind. She is just a good person. I love her business. But her and her husband joke with me and play with me all the time. They told me to put blue in my eyelashes to help me get more people looking at my face. Her husband Jimmy was like, if you do this, maybe people will look up a little.
It'll work. It'll work.
Yeah, right. Yeah, right. It's hilarious though. But okay, I don't want to miss.
I'd like to take that discussion and take it one more place.
Okay.
And that is that even if you are not creative, even if you're not a hardcore optimizer, knowing when your strategy works and when it doesn't is key.
There you go.
The way you do it might not be one size fits all, and you don't want to take and, you know, subtract things and add things for the market. Just recognize the market for what it is and when your strategy is going to work.
There you
Bingo. That's why I'm moving to Asia.
go.
Seriously.
Derek's not wrong, guys. Honestly, he's not wrong. And I'm going to show you guys that here in a second. Also, I'm going to get out the sessions indicator too. So real quick, we've got a signal on the 1 minute time frame on German 30. It might mean you have to hold a pullback, and that pullback might be too much for your tummy to handle. And that's okay. For me and mine, right now we're getting a bearish candle. So I'm going to zoom in a little bit, double click. Okay, we might get this kind of bearish candle. We could reject pretty hard. So you guys can decide now that we've got the signal. Okay, let's see. The next candles are making higher highs, right? Barely, but they are making higher highs. You can decide if you're going to wait for this bearish candle to kind of come and give us a slightly better entry. So you wait for the bearish candles to continue and then wait to see that the bullish candles start to form and take a slightly tighter entry. And that's kind of like that +1. So 4 + 4 is 8, +1 sometimes. Not every time, just sometimes. So if you want to do that, now if you want that stress-free, I'm going to take this trade. I know where my stop loss is going to be. I know what I can handle, and I'm going to trust this trade. Then go ahead and you can enter now. You could reject off of this, and we could totally fail. So that's just honest to God trading. I wish I could lie and say something else, but I can't. So there you go. I am going to go ahead and take an entry on this pair. You guys know where my pending order is also. It's kind of in and around this area. So that's that. So somebody asked real quick about NAS. So let's take a look. From my other screen, it looks like it's doing something pretty comparable. Remember, this right here does have divergence. The US 30 does have some massive divergence as well. So that's a huge, nice, beautiful move. But you have structure to the left on this, unlike what you saw on on German 30. We do have some structure over here to the left. So I'm going to pop up one extra time frame just to get a kind of a clear picture. This little zone here, I'm sure Scott would kind of draw a box, is structure. So we could very easily get trapped in this zone, right? We don't want to necessarily do that. We could have this nice push. We, play around, nice push, drop. We can easily get trapped in this. Here, I will go ahead and draw a box.
I think for an upward move, this is more, oops.
It's okay. Straighten out. There you go. Now
I would put it up there.
So you'd want it to break up there.
Yeah. It's because this was our last push up that was of any significance, and it rejected from there.
Let's see.
So we know that there are sellers sitting up in this area.
So he's saying you'd want to wait to break this area. So
Well, no, or it's a reasonable target.
oh, okay.
We'll seek those sellers.
Gotcha. So that's a nice 50 pip zone. So again, same concept. We have an engulfing bullish candle. We've got a very pretty double bottom. We don't really have divergence too much, but we definitely have some reasons to consider this a buying, instrument. So now you can decide to go down to the 5 minute. Let's go back. And you're retesting the next higher time frame 50. We can wait for that kind of pullback to get a slightly tighter entry. Because if we buy at the top, so let's just say we take a buy, that's 1,000 pips, guys. That's 1,100 pips of room that you would need if you're wrong. So waiting for it to kind of come down isn't a bad idea.
I will say your red line is pretty good because of all this consolidation right in here.
Yeah.
That was kind of a level of agreement.
And we're kind of already rejecting off of that. So
Yeah.
Don't go chase this trade and take a buy. This is that +1. And I think I'm going to laugh with her a little bit because we had such a good time just joking and playing, doing way weird, pretty beauty stuff. But either way, something to do sometimes. I'm going to use that from now on and kind of give you guys an idea of what I'm referencing. Because yes, this works. So here's your current next higher. We've got a 5 minute entry and around here. This is when the move happened. Okay, now we're waiting for this to kind of retest or give us a clear entry. And you don't need the arrow. You can use the arrow depending on how you have this indicator set up, but you don't need that to happen. You do need to understand the rules. That is something you absolutely need. So looks like my entry is getting ready to be hit. Let's see. Maybe. Well, yeah. Okay.
Now, your earliest possible entry on this move, we've got all these pushes down below here. Keep pushing and rejecting. When we get this push all the way down here, and then it pulls back behind that line, that's a hell of a spring. It's like pulling back the elastic on a slingshot.
So Scott's spring lesson honestly helped my trading. So we all learn a little bit as we grow. His spring lesson helped my trading. Some things he says, it confuses my trading. I'm not going to fib. But most things, like as we learn and we grow together, that concept helped my trading an awful lot. So I hope you guys heard that. That even helped me as we kind of learn and grow together. So by the time we got to here, you have a really good entry. Like the way I trade personally. Everything's kind of lining up. By the time you get to here, yeah, that's a good entry, period. So that's what I'm seeing on NAS for the person who asked. Thank you, Scott. Well, that's what we're waiting for. You do have some room in this zone. Just know this is a zone that you could get stuck in. So if you want to take it, take it. To me, German 30 seems to be the safer move, which is what I'm going to talk about next, why we're kind of looking at some of these other pairs. Guys, the strategy works, and the indicators and the indices and the pairs we choose, they all work. They work pretty darn well, actually. The problem is some days you jump in German 30 and US 30 and NAS are the ones that moved perfectly and German 30 went against you. Some days you were like, okay, today US 30 looks the best. I'm going to go with US 30. And then, of course, NAS was the one that was super smooth that day and you were stuck in a US 30 trade that played around. And, you got some out of it, but not much. So there's so many variables that I want to discuss today that talk about how do you actually get that compounding plan to work for you? How do you actually get that to work? And remember, I'm not trying to get you to that elusive, 6 figures at the bottom of the thingy. I don't care about that. And I'm hoping you don't either. My first goal is to say, hey, if you're looking for $1,000 a week, you can compound it up to $1,000 a week, withdraw, leave a few extra hundred each time you do it. And then eventually you're going to, give yourself a pay raise. So I'm not just looking to get to the bottom of the sheet for the sake of getting to the bottom of the sheet. I'm in that German 30 trade, guys. And since you guys can only be in one trade, which will be the next topic I talk about. But what I am looking for is how do I get you guys to compound effectively and to become independent traders? So I've talked to Uncle P, got a lot of good feedback. And in terms of like the content that I deliver, I know I talk a lot. I know I talk fast. But I'm looking to be impactful and I'm looking for this time that we spend together to be beneficial. So if you guys are in that trade now, you should be up in some amount of profit, give or take. So we're not going to protect it. But here's the whole point. So let's talk about all the things that go wrong and all of the things that, I don't know, somebody can't hear audio. Oh, he can't hear me. So someone's got to say in the chat. But I was about to talk. I was like, well, that's not going to work. So anyways, here's the thing. Obviously, first and foremost, we can only be in one trade at a time, especially when you're doing high risk. And you wouldn't want to go take every indice, even if you did get a signal and a good entry on every indice, because that's poorly leveraging, per currency pair, per instrument. That would be like going to buy all the GBP pairs. Sometimes it works really, really good, but the time it doesn't, I promise you, took away every time it worked really, really good. I mean, they're gone, can't get it back, can't undo it, it's done. So you can only be in one trade. That's the thing that you're kind of noticing. Sometimes, depending on your risk and your management skills, you can be in two. But for the most part, you're trading one trade at a time. So how some of us are getting this compounding effortlessly, and then some of us are just getting kind of tripped up, is just the luck of the draw. Like you have a signal on each pair and you picked the wrong one that day. So that is a variable that you're going to run into, and how to avoid that is to be able to look left, to look at structure, and to pick the most probable one that has the most room. So that's something that I'm hoping you guys can add as your +1 in terms of what trade am I going to choose today. In general, if you're using the 5 or 15 minute time frame, you're going to be able to find a really good trade somewhere in, that New York session, and you're going to find a really good trade somewhere in between Asian and Asian and London. So in theory, you can find 2-3 really good trades a day on the 5 or 15 minute time frame per one of these indices. And I'm going to pull up the spreadsheet here in a little while. You guys are in profit on that. And at this moment, I'm going to tell you not to protect it. So don't protect it. And we're going to go over why. So right now you're up, give or take 200 pips. Sorry, can't talk. Give or take 200 pips. So we're going to hold it and we're not going to touch it. So my hope is to go over some things that can help you get from point A to point B. So first and foremost, knowing which trades to take and which trades not to take. Sometimes you're still going to be wrong, and that's just the luck of the draw, I think. I don't think there's a science behind that, but looking left will help with that, number one. Number two is all going to come down to most of your management. Your management is going to be the biggest, most painful, most hardest thing to do. And having a trade manager that takes all the drama out is a really good way to be. So, and I'm going to use myself and my own reasons and my own rise and real life as to why. So I took this trade this morning on German 30. I don't think I took it there. I think I was, I know, hold on. Let's see. Well, the candles don't look right, so I know I didn't take it there. So here's how my morning went. My youngest son can't go to school because he threw up. So now they're saying he might have to stay home for a couple of weeks. I'm going to have to get him to a doctor and get him tested. He doesn't look like he has COVID, but 2 weeks is crazy, especially if I have travel plans next week with my oldest. So long story short, I was fiddling with my youngest this morning and, of course, getting ready for the call and everything else. So I didn't want to be micromanaging a trade, but I also didn't want to be stuck in a heavily lot-sized trade when I couldn't watch it, and I knew I had to do other things on this morning's call so I could trade actively with you guys. So remember, one trade at a time kind of mentality. But in and around, let's see where I was. Okay. I believe I took that trade somewhere in and around, oh my gosh, before these wicks. So in and around here, the problem with over managing, the problem with I'm up, I'm in profit, I'm happy, I don't want to lose anything, it's been a little bit of a pain, sorry, is we all have stuff going on in our lives. So we're doing stuff, right? And we justify, okay, well, we were in drawdown maybe a little bit because you have a spread in fees. We justify, well, if I just protect a little bit, now I'm up, on this pair, it's worth, a little bit more than US dollar pairs. So on a bigger lot size, that's a pretty penny. That's a couple $100, right? Or more. So this baby move, you're justifying, hey, I don't want to give that back. It's a few $100. I mean, and I got stuff to do, and I'm going to check on my son, and he's asking for a cookie. He's thinking I'm going to Starbucks, and da 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 da, and all this other stuff is happening in our lives. So we are in this trade, we're in profit. Let's say at this point we protect it, okay? And we didn't protect very much, obviously. So we're up a couple pips, maybe 3, 4 actual pips, about 40 pips on an indice. And what happens? 99% of the time, we protected this trade somewhere around here. The spread is wider than this is. So remember, the spread counts. And what happens? Price comes up. You now effectively close with like 2.5, 3 pips, or 20, 30 pips on an indice. And then you miss the entire, what would have been your 20 or 30 pip, 200 or 30 pip target. You miss the entire thing. And this is what most of us are doing, me included. I'm much better at it when I'm actively trading versus just jumping in that willy-nilly trade because I wanted to. And this was I saw the retest. I knew it was going to, I was pretty confident of where it was going. And every one of my rules were lining up. So I was very happy with that. But either way, I didn't catch this move. Instead, I got like 2.5 pips out of from where I entered. That's 500 pips. I closed out with 23 pips, 23 point something. That's how many pips I got out of it because spread, is a little bit bigger. So in and around here, this is where it knocked me out. And then you're done. So I'm hoping that you guys can start seeing this happen. And the more you understand that, the more you understand you are paid not to touch this. You are paid not to mess with this. You are paid to leave it alone, to know, like Scott said, when not to trade, but also when not to touch your trade. The biggest and probably one of the most important things. So does anybody understand that? Has anybody else done that? Does anyone want to be super humble and transparent and acknowledge how often that happens to them?
Hey, Jenny, this is Robert. I've been doing that for several months, actually.
Okay, so we have identified the problem. What are we going to do to fix it?
It's all about the psychology, right? So when you see it in profit, like this trade as an example, I probably would have protected it by now and would have been out. The moment it started to sort of draw down a little bit, we got a little bit nervous about it and I would have just exited. And then, like you said, watch it, then go the direction that we're in. So my entries are good. I see the structure, but for some reason, it's hard for me to ignore my emotions.
Okay, so how many pips are you up right now on German 30?
It's 13, almost 14 now.
130. Okay.
Yeah.
What broker are you on?
Hugo's Way.
Okay. Let's see. I'm just kind of curious. So you're in Hugo's Way. Let's see. Wrong broker. Let's try this one. So the problem is, how likely is it that we are going to come back down, okay, and potentially kind of kiss this area, maybe even pull back, freak everybody out before we continue? I mean, it's pretty likely, right? I mean, it definitely is likely, just so we're on the same page. The problem is like what happened yesterday. So S&P, of course, it's not on here. Let's pull up S&P. So the problem with babysitting, frustrating, and sometimes even outside input, including my own. So I am not exempt from this. We saw there were different trend lines, obviously. So we ended up drawing a trend line to show where it would have been, right? So we knew we kind of retested that trend line, and somewhere in and around here is where we got in. We knew we had room to pull back, but so I missed this not once. I missed it once on Tuesday morning, but twice from overprotecting. So I did not catch the majority of this move. I caught a baby amount twice, which is just unhealthy. So even from where we entered, so let's say it was a later entry, different time frame, this one, a slow moving pair, that's 800 pips. And again, not really from where we entered. I'm going to draw a line somewhere in and around here. That's not politically accurate, so don't fuss with me. Stop loss above structure, which would be in and around here. You don't ever come close to your stop loss. You get to catch the whole move. When you have some disciplined trading, guys, to say, hey, I entered here. If it doesn't touch here, I'm going to trust this trade. And then that's what I'm going to do. So rain, pour, shine, drama, and everything else aside, I'm going to trust this trade. And that's all I'm going to do is trust this trade. So from where we entered, we never got close to the stop loss, ever. Not even once. This is what it means to hold a trade and not just be a scalper. That's the whole concept. So I'm really good at holding a trade as a swinger, but learning to hold one as a scalper has been proving to be a little bit more psychologically and emotionally demanding. Here I'm lying, very psychologically, emotionally, demanding, to be fair. It's a lot, like a whole bunch. Like you have no idea. So
And
how do we
so where do you think the difference is for you?
the difference? I'm sorry.
Where do you think the difference is in your psychology of holding through a drawdown in a scalp versus in a swing trade? Because you're very good at holding through swing trades.
Yeah, I mean, I can hold forever on a swing trade. I think the lot sizes are bigger. Well, they feel bigger on the indices. They move more. The 4-digit number on the side of the screen is kind of hard to see. It's a little bit more emotionally draining to see 4,000 pips here. Better get one with a negative. Even though
Perhaps because you're watching it.
that's because you're watching it. You're treating this different than you would versus saying, hey, I see this trade. I know what it's doing. I'm going to keep my stop at, here. My stop is there. It doesn't come close. And most of the time, so even if let's say we bought this baby trade, we're going for a little bit, stop is below, even if you're doing the tighter one, do you get your target? Yeah, well, this is a slower moving pair, but still you get your target depending on what it was and you're done. So the difference, I think, is just the emotionality and the whole concept of watching the trade and trying to come touch it all the time without fail.
And to be clear, I wasn't trying to grill you. I thought that the answer would be instructive for everyone.
No, it's okay. You can grill me, but also tell me if I'm saying the wrong name. You're good. Honestly, I think it is helpful. So the point is, how do we combine these two worlds that say swinging, it's okay to hold, scalping, it's okay to, get in and out. How do we combine that to form this hybrid level of when I find an amazing entry, for example, on this pair, what am I going to do to maximize this gain? Because that's ultimately how you're going to become a good trader, is maximizing your wins and minimizing your losses. So in scalping,
I think like 2 weeks ago, I said that I was gonna do the $100 challenge, and I ended up.
Somebody need to mute their mic. Sorry about that, man. Somebody need to mute their mic.
Hold on. It could honestly be me. My son's at school, and it's kind of loud. But what I was trying to say is, I was gonna do the $100 challenge, and I still am trying to do it. But I had really bad emotions, and I had really bad and I never knew that when I was doing NAS 100 and I was scalping, because it's so fast. You get your money really fast and you get out. But once I started doing the $100 challenge, it taught me how to be more patient, because I started off with 100, and like Monday I started the week off. I literally like almost blew the account. I had like $7 in there. And I was like, you know what? I'm not even going to give up. I'm going to still do it, because I still know how to trade. But my issue was didn't have the emotion. So every time I got negative, I was like, oh, I'm out of here. Oh, I'm done. Oh my God, I don't know what's going on. And then once I understood that it was my emotions, and then I added a little bit of tools that you guys told me Tuesday, I built it from $7, and now I have almost 300.
$7 to 300.
Props.
Yes.
What percentage?
So, and a lot of it was just leveraging. You got to make sure you have the right leverage. You got to make sure you have and just trust it. But what I did was the shorter, the less money I had, I started just trading on the 1 hour and just leaving it, and just because if you have most likely whatever the 1 hour is telling you, that's what it's going to be. You just have to make sure you get a good entry. And just give it time. Mr. Pat said that, and it really stuck with me when he said, if you don't have the emotions and you don't have like the patience for this, you're not going to be a successful trader. And that really like stuck with me. And I was like, you know what, that's what I have to work on, because I have awesome entries, I have awesome things, but I just couldn't stay in my trades. So, and that's what helped me. And I think that, and now that I have accomplished that this morning, from the set, I literally started like maybe Sunday with like $7, and now I have almost 300. So once I've done that, now I'm going to apply that with my bigger accounts, and let's hope for success. Well, but like you said, how are we gonna get this hybrid? And I'm just like, I was literally just talking about this with my friend, and I was saying like, I just kind of just learned how to like swing trade, and now I'm gonna mix that with the scalping. And that can be something really dangerous.
It can be dangerous. That's awesome. Frankie, I'm going to tell you, I know that you muted yourself because of the background, but if you grew your account from $7 to 300, that percentage of gain is better than some of the best traders on my FX book, like so the verified accounts. I'm not talking all
Over
the
40 times the starting capital.
that's incredible. So what I would tell you to do first off is, I know it sounds counterproductive, and I'm sure the 20 bucks in your pocket means absolutely nothing compared to what we're trying to achieve here, but take out 100, start another fast moving, kind of high risk account that you can have a separate account. So at least you paid yourself. You paid for your next investment. Like, so take 100 of that $300 out and put it in this is going to be my fast $100 challenge account. And then so even if you didn't go buy a Starbucks with it, something I would probably do, at least you have paid for your next investment. And that is psychologically, it's really, really beneficial. It shows you this is real. So please consider doing that. And man, that's impressive. And that's better.
I definitely want to do that because, like you were saying earlier, make sure you have I can't get the right word that you were saying, but basically make sure you have like a plan. So you got to pay for this and the money, you got to pay for this, you got to pay for that. And another thing that was helping me too is because my wife wants to learn how to trade, but she doesn't really want to take the time. So I just say, you know what, give me your account and I'll just manage it for the time being. And and every time you got a question, just ask me. So with me doing that helps me learn how to manage more than one account at one time. You get what I'm saying? So, and that's something I definitely want to do. So like you were saying, take $100 out and then put that into another investment and then do this and put another investment. Only thing that is like, I just got to make sure my pending orders are correct.
Well, yeah. And here's another piece of advice that goes back to what I was going to get to also. Since we can only take one trade in this high risk account, right? And today we chose German 30, but US 30 had divergence, right? You can take a US 30 in that second account. And let's be honest, sometimes it's going to hit, sometimes it's not going to hit. But when you have more than one account, the blessing and the curse, of course, like anything else, is you don't get to micromanage both accounts. You can totally mess this up. Let's be honest, our superhuman ability to mess things up is pretty impressive, but it's much harder to over manage both accounts. You're going to let one of them run. You're going to hopefully let it play out. And yeah, the hit is going to be hard, but at the same time, not too bad. So.
The other thing I want to point out is that obviously he was not trading NAS or German 30 or US 30 with $7 in the account.
And that's what helped me learn how to become more of a swing trader, because they moved at such a slow pace. I was like, you know what, I can't do this. I'm gonna just trust my analysis on the 1 hour and just come back. Even if I see some negative, just relax. Take a deep breath and just come back later. And I kept doing that. And then sometimes it would be negative, and then I come back and then I'm in profit again, and then it goes back, and then it goes back to neutral, and then the next thing you know, hits my target. Most of the time, morning bells or something like that. But you just gotta just trust it. And but I think the most thing that I learned most about it was just helping me out with my emotions, because once you see that negative red number, you're just like, oh no, I can't do this, I'm getting out of this. And the next thing you know, that's just them just trying to play tricks on you, and that really helped.
Well, I'm glad that helped. And honestly, way to go. 40 times is pretty impressive. That's not even kidding, especially from $7. It's easy to play with bigger money. It's much harder to manage that type of a money. It really is. I commend you seriously, especially in Hugo's way, man.
And I think that's what it was. And that's what I was crying about when my wife's like, oh my God, it's so much easier to do if you had like $1,000 or if you had this, because you have so much leverage, you have so much room to do things. But when you have this, you don't really have that much room for mistakes, So I think that's what really helped, because, $100 is $7, at that point I was just like, you know what? I had no choice but to just trust the 1 hour and just walk away. I had literally no choice but to do it.
And you were using my fractal break strategy, right?
Yes, definitely. I definitely used that. And that's it. It didn't move fast enough for the 5 minute. So, and I didn't really trust it that much. So I really just did the fractal break strategies on the Forex pairs and just came back. Sometimes it would take, some of those trades took 2 days, or some trades took from morning to night, but it's just having the patience and doing that. And and now that I have that, I can go to my bigger account in NAS 100 and do German 30 and hopefully try to swing trade those eventually.
Hey, I wanted to tell you,
Think, Frankie, if you are getting 40 times your starting capital in how many days?
3, 4.
Literally Sunday.
Yeah. So why would you want to do anything else? Seriously, why would you want to do anything else? Take what's successful, fine tune it, and do that.
Scale that up.
Need.
Yeah, and that definitely stuck with me too.
Well
And,
said.
yes, Tuesday that stuck with me too. When you guys said two things she said was stick with what you really know, because she said, you know, you were successful with that, and I was like, you know what, I really was. But my only issue was I wanted to learn more. But and then you said, you know, we get paid for waiting, and that just stuff just sticks with me. Sometimes words just stick with you. And it is because I think that the biggest issue that I was having was I was learning so many strategies at once. So when I see something, I see something, and I see something, and I see something. But what really is like when you with one strategy, you have to stick with one strategy.
Yeah, so take that one strategy and trade it. If you want to learn other stuff, great. Trade it on demo.
There you go, Scott. Like seriously, scale up what you're doing. 40%, 40 times.
That's 4,000%.
That's 4,000%. So scale that. So ignore everything else. Like you can still learn, and a cumulative knowledge is great, but remember, it's all theory based. If you can do 4,000%, okay. So there's a female trader who is kind of like my she's somebody I aspire at, and I kind of compete with a little bit on it because her numbers are also public on my FX book. So her best month was like best month was 7,000%. That was the best month for this company, which with all due respect, she's got formal training. Most of us don't have formal training. Most of us are just, you know, people in our, you know, we started in our laundry room desks kind of thing. So formal training, and her best month is 7,000%. Best month. So I'm hoping you're catching these words too. Month.
I got it.
Month.
Yeah, that's an A1 compliment. Scott told you to keep doing what you're doing. So I would like type it on a piece of paper and frame it above your trading laptop.
Yep. So drag and drop every entry, write down the rules you took to get that 4,000%. Laminate that stuff. I'm not even kidding, or put it in a plastic sleeve. And verify that's what you're doing. Keep the 4,000%, because even if you only do 2,000%, because some weeks are going to hit hard than others, keep doing that and scale that up. Just scale it. Once you find what works, you scale that. You don't keep searching.
Oh, and what Jenny said about dragging and dropping your trades, do that periodically. Go through, look at all your trades, say, did I follow the rules as I understood them? Did I not understand the rules? Did I win more from the ones where I didn't do the rules? And how could I codify that to become the new strategy for me? You know, it goes back to that continuous improvement thing. It's the incremental changes that Jenny was talking about earlier.
But be careful not to over-optimize, because when we try to over-optimize, guys, to avoid losses, which was kind of the topic that I was focusing on today, when we over-optimize, we over-punish ourselves. We are self-inflicting stupidity, said very lovingly, by over-optimizing every potential trade, and then we are not doing well. So
yeah, that's very, very true. And you know, it's something I came to a conclusion of long ago in my technical fields, is that any system that responds in a really big way to really small changes is unstable.
Therefore, it's very easy to mess it up with optimization. Very easy. So, okay, well, real quick, let's keep going for just a second here. I wanted to tell you, Frankie, I hope you can still hear me. I was thinking about you actually last night, and I'm going to show the trade manager here in just a second. But if you're looking at the fractals and that's your thing and you're good at it, they're too much on the 1 hour. Can't do indices on the 1 hour, at least not for my taste. It's just too much. But if you go to the 15-minute time frame, same rules apply. You know the strategy that I taught, and it works. The 15-minute indices, and you are in the right side of the 50, you get a break and everything lines up, okay? You have this area. I'm going to draw a box on this area. So remember, we're going to have to know which one of these to take when you have an area like that, okay? you have to go with kind of like that mid ground, that you can either go mid ground or you can go to the bottom, totally up to you. Come on in. Then you know that this would actually work. It actually doesn't work half bad on the 15-minute time frame for the indices. 1 second, guys. My little guy's in here. Hey, baby. Oh.
And just make sure you've got enough size to support the drawdowns.
Yeah, I'm listening.
I think Jenny is dealing with some home stuff.
Oh, yeah. Sorry. That was my little guy. He asked me about Fortnite. I said, you can't interrupt work for a game. Sorry, guys.
Tell the truth. You
gotta have
reboot
your
your
No
Mac.
problems.
I know, right? Okay, but this, you have to be able to support it. US 30 is a bit tense. It's a bit much, but German 30 and NAS on the 15-minute time frame, S&P even, gold on the gold, I'd probably do closer to the 30. But that's when you optimize and you scale what works for you. So scale what you're doing in a way that works for you. You can do the indices, just you can't do them on the 1 hour. You can do the Forex pairs with the fractal break. You just can't do it on the 5-minute. So that same strategy, just knowing where to use it and how to use it. So that's when you know when to add the +1. So again, 4 + 4 is 8, but sometimes you have to add 1.5. Okay, same concept. So everybody understand all that pretty well? Anybody got any questions or insight from that? So here's where we're at real quick on German 30. I am going to hold this trade. I don't have a reason to get out of it just yet. I'm going to go to the 5-minute time frame. I trust this analysis. So we can easily kind of do this ABC pattern. We can touch a Fibonacci level. We can touch a quarters theory. We can do, we can have a bat. I mean, there's thousands of theories of what's happening right here. Right now, I don't care. I trust my analysis to come near my target. So we have not broken or given us any reason to think that we should get out of this trade yet. We haven't made a higher high, a lower low. We don't have a reason. And that's where all those mismanagement and overprotection and what about this and maybe babies come into play. And then you get stuck and you give back what would have been a great trade. I mean, this trade potentially can give you a whole stinking bunch of pips. Not to say that it will, but potentially we can get 2,000 pips out of this. I mean, if we did hold it. So right now we're just holding, we're trusting and we're waiting. So that's
We
what's
broke the 50. We're retesting the 50.
Scott said it simpler. He's infamous for that. So, but there's that. Obviously, all that stuff is good. So, real quick, let's go to the trade manager. If you guys don't have this, don't know what it is, if it's too much, too confusing, please hop off. No hard feelings. Please don't message saying it's too advanced. Please don't message saying, well, you taught this instead of that. Guys, I'd like to teach and give back what I know, which isn't perfect. It is not flawless. Again, it's just cumulative knowledge. You hear me talk about it all the time. But you like that?
I like that.
I'll have to explain why. You'll like it. You'll get it. But here's the thing. We're going to talk about different strategies, different ideas, concepts, and we're going to go with the flow. It's not always going to be perfect. It is variable, and it's still ultimately, these are ideas. You get to decide how you want to use it, how you like it, if it works for you, what to tweak, and all that other stuff. So before I get started, Scott, you did find out that, I don't know if that one's mine or whoever's, but you did, so the trailing stop thing was a bug?
It was a bug, but only with a visualize as far as I know. I'd like to get confirmation that it still is trading the rules as you think they're supposed to be traded, in a live trade.
I can't confirm that or deny that. That's way too probably advanced. How would I confirm that for you? Or
Well, just by putting a trade on and, having it start up the way the visualize shows that it should after I give you the new version. But is Catherine on?
I thought I heard her earlier. Let's see.
Yes, sir. Yes,
Hi, Kat. So Jenny discovered a bug where visualize, if you are starting visualize at a particular level, but with stop loss set to 0, so there's no initial stop loss and you don't start trailing until a little later on, that that Visualize wasn't showing the trade starting up. Have you ever tried not starting with a stop loss?
No, I always have a stop loss.
Okay. Yeah, this would only appear if you're doing a stop loss of 0 on initial stop loss with trailing starting at a someplace in the distance. I'm calling you out, Kat, because I know you're one of the heavier users of this. So
Yeah, I can play with it and see what I see.
yeah, because it does not work in Visualize. The trailing never starts, but the reason that it didn't start is unrelated to the actual ATM expert. So I think the expert should still work, but I'm hoping to verify that.
Okay, I'll play with it on demo and see what I see.
Okay, and the other thing that I did fix is the percentage gain on risk down here. If you're starting with like a Donchian channel or something that's structure based, it will actually show you correctly your percentage gain on risk.
Oh, that's a cool feature. That's awesome.
Oh, that's nice.
That is
So
awesome.
anyway, go ahead, Jenny.
All right, guys. So, well, there is a slight bug, and there is something that I will change the settings on this once that's fixed. I wasn't sure that it was working the way I had it set because I couldn't verify it because I couldn't see it. And I'm not that technically inclined to be, accurate in my analysis to say for sure.
I'll tell you what, I'm going to push the version out after class today.
Okay. So I just so you guys know that I will change this slightly different from what I've had it and what I've been using. But it works first and foremost. It works pretty darn well. There's a few small tweaks I would have to change back now that I've altered it because I couldn't figure out what was happening with the trailing stop aspect. So I could be wrong on that, but this will give you kind of a foundation. Obviously, you might have to switch back and forth on the trail versus the exit, and Scott can go into more detail on the technical reasons as to the why and as to the how. So here's the deal. Again, we're going to talk real quick what the strategy is across the board. It's very, very simple. Remember, you're just looking for the 3 to cross the 50. So ignoring every arrow, ignoring every line or every fractal and everything else for just a hot minute. Here's the reality. This green line on the MACD, on the custom version MACD, is what we call the fast MACD. This is the buyer's power. This is the momentum, right? So what we're looking for to take a trade is very simple. Momentum, the buyers are in control. Momentum is up, right? You definitely like it to be above the 25 bare minimum. You definitely like the retests, or like when it consolidates like so, you've got a much heavier move. When it consolidates like so, all this consolidation, you're looking for a heavier move. And that's just kind of how it works. Jumping in from one large to another large level of momentum is a little different. It just means you have this violent pullback and not necessarily a reversal. So different way of looking at it, some added information maybe, but here's the rules you're looking for. You guys know it across the board. It's pretty simple. The buyers are in control. Momentum is high. Fast MACD is above the 0 by at least 1 line. So 1 closed bar, which means you should in theory see 2. Not in theory. You definitely should practically, factually see 2 bars. So I'll zoom in to make that crystal clear. This is arguably 1. This is 2. I mean, we could even say 3 here. We need the 3 to be crossing above the 50. This magenta line, not easily seen here. That's the 3 EMA. That's the 50, right? So that happens somewhere in and around, and arguably which candle, I don't know, but we're going to be a little bit more conservative and go 1 candle over. So we could go anywhere in this area. Those are the rules of the strategy, single time frame. It is not complex. It's not difficult. It's very, very clear. Those are the single. If you have this set at current, this should be your entry. I can't guarantee where the arrow would fall. It might fall a handful of candles back because it takes time, but that is your entry for a single time frame. If you're looking for a multi-time frame entry, so you want to be in conjunction with the next higher time frame, you're looking for the next higher time frame 3. So again, the conditions still have to be met. Buyers are in control. Momentum is high. Fast MACD is above. This middle line here, the color changing line, multi-time frame moving average, it goes from green, it goes to purple, is the next higher time frame 3. So that's EMA 30-minute 3, right? That's what that is. That happens maybe one more candle over by the time it actually crosses. Maybe 2.
Yep. It's exactly where the arrow paints.
Exactly where the arrow, there you go. Exactly where the arrow paints. Scott's got me there. I was trying to deliberately ignore arrows, Scott. That's what I was doing. So I can explain in the way the rules are. So those are the, right? That's it. It's not complicated. It is not difficult. It is not hard. That's all you need to know. Now, again, that's that whole concept of, I wanted to say that, and I wanted to say it so simple and in 2 sentences, because I'm such a believer in the 4 + 4 = 8. And yes, sometimes you have to be mindful of the other variables that go into play. There's, we don't trade around session close of New York. I don't avoid news too much, honestly. When you backtest, you don't know what news was. So you backtest a strategy based off of not knowing when the news was. So if you always avoid the news, you're potentially missing the winning trades, along the way. So be mindful of that as well, if you would, please. That it's not always about avoiding the news, but just knowing your strategy. So there are some other variables that need to be taken into play. Areas like this are a mess. You have to be careful, period, across the board. But here's the deal. Provided if when you get in, okay, your next candle, oh, come on, don't be a silly butt, makes a higher high, okay? You need to be moving in that direction. I don't mind if it pulls back. I don't mind if you go to a smaller time frame and you kind of wait for those bearish candles to complete, grab the first green and then continue. I don't mind if that's how you do it, but you do need to be moving in that direction. This wick would be very ugly, but here's the deal. This is kind of how that setup would work. So I'm going to hit escape to let this freeze. And remember, I would switch this back around. I only changed this because I couldn't verify that it was working because of a small bug. It does appear that it was working even though I couldn't see it. So that could be a technical thing, but the settings are comparable enough. The only difference in the trail versus the exit is the exit has to close. The candle has to close on the opposite side of the exit, whereas the trail, it only has to touch. So just so you kind of know the difference in those settings as we get to those. But ultimately, this is what I have been doing in terms of finding my entries and how I've been managing them and trying not to touch them. So the ones that I don't touch, the ones that are catching me the most, the ones I don't micromanage and go and touch and mess with nonstop, this actually works, and it works pretty darn well. So how many pips would this trade on GU get you? 15-minute time frame. If it will allow me to get my crosshairs, we will. Oh, it tells you. So 92 pips on GU, right? So somewhere in and around here. And that's without the exit. There's no scale out. There's no closing a portion of the position. I really want to close a portion of the position. But every time I do that, it is not as effective as my mind and my feelings say it should be or say it is. So again, I'm going to go to here, kind of take a look at this one. Same kind of concept. This one gets a little bit less. And if you got in late, depending on where you got in, you might even miss your take profit. So I'm going to keep scrolling up into where you can see a spot where you would miss your take profit and not hit it. It's would this manage quick enough to get you out of the trade if you did not hit your take profit? Because having no take profit or having too large of a take profit pretty much means you can have a huge move like this and then give it all back, like all of it, if you have no take profit hit, right? That's not a fun way to be. So we don't want that kind of stuff to happen. But we also want to help try to maximize catching most of the move. So this is kind of what I've been doing to kind of see what that will look like. So if we're getting any signals in here, so if we're only going off of the arrows, which we're going to discuss too, I'll turn this off so you can kind of see, would we take this trade or would we not take this trade? This is a bias change arrow. This is not, the 3 does not cross this 50. Okay, in real life, this is a bias change arrow. Let's see, we got the arrow here. So in real life,
these settings are going to be that the next higher time frame 3 is above the next higher time frame 50, which it was in the beginning. It's probably going to be the MACD crossing.
This one is.
Yeah, that's what's going to be determining the bias at that point. Although it's also trigger, or it's also price above and below 50.
So what would trigger this bias change?
Now, this is all on next higher time frame. So it's three things. 3 has to be above or below the 50. The price needs to be above or below the 50. And the MACD needs to be above or below 0. If they all three agree, you've got a bullish or bearish. And if they all three do not agree, you got a neutral.
Let's go to the next higher time frame.
So I need to be looking at this as a single time frame.
Well, wait a minute. This histogram applies to the actual current time frame, right?
Yes, yes. However, your bias is set by the next higher time frame MACD in the case of having it set to next higher. So where you're crossing right there, price has been above 50 and your 3 has been above your 50. Only the MACD went down below and then came back up. That's what caused your neutral.
So it was like a fast MACD cross on another time frame.
Yes.
Gotcha. That makes more sense. That I understand. Okay, well, back to this. Here's the reality. Go ahead, Donna.
Hey, Jenny. Sorry, no, I was just gonna ask you about the German 30 trade. We're still in that, correct?
I am still in that trade. That's correct. So we still haven't broke above this fractal, broke below this fractal. I'm holding this trade. So could we have protected? Yes, but I'm trying to teach you guys to trust the trade. That means if we win or if we lose. That's 20 pips, not bad. Sorry, 200 pips, doable, give or take. But for now, we're not breaking below this fractal. We're not making a lower low, and we definitely have some room to push up. So if I got some more bullish candles and I was in this area, I would take another entry at a better price down here. But for now, I'm going to go over the trade manager. I have a 3 and an 8. Hold on.
That's the 5 minute. You want the 5 minute?
I'm sorry, I don't hear you.
You're on the 5 minute.
That was on the 5 minute. Yeah, that screen was on the 5 minute. So what is the third MA you have there, which triggered that arrow Scott mentioned? I have a 3 and 8 by my candle. What is the third?
It was probably the next higher time frame 3.
So we have 3 right here. This right here is the next higher time frame 3. Does that answer your question, Tim? So
Or which arrow is you referring to, though? That's
So this is the current higher,
okay.
the current 3. This is the next higher time frame 3. This is, I use the 8. I'm just kind of biased that way. And then this is your current 50, your next higher time frame 50. And every one of those are EMAs on my chart.
Now remember that if you're using the 3-9 crosses, if you are using those as re-entries, you should probably not be displaying the 8 on your screen. You should be displaying the 9.
Yes. Yes. It just helps me see what's happening on the next higher time frame. I don't get to see the histogram on the next higher time frame, which would explain why I couldn't understand this particular arrow, because I'm not seeing the histogram on that next higher time frame. But just to kind of go over the arrows and why we know when to ignore, well, what I would be ignoring and what I would not be ignoring is when I get this arrow, yes, it's a bias change, but we never really even crossed back over the 50, the current one or the next higher one. And I'm talking the price and the 3. So I'm not looking to take this trade. And even if I felt like, okay, this has a ton of room by structure, I know this has got a ton of room to go up, I'm really going to trust this trade. Even then, I would still need the next couple of candles to make, a much bigger high. And this doesn't really break hard. It does break the fractal. That's why we get this one here. But that takes 1, 2, 3, 4 candles. And when it's 4 candles, this is one of those N+1. So if we pulled back and then continued, I would trust the fact that this doesn't break out for 4 candles. But without the pullback and then barely kind of touches that area, so it kind of just straggles here, I'm not going to trust this making a higher high. So that's how I would be seeing it personally. Okay, but just to continue, so I'm not taking this trade. We did not get a 3 and a 50 cross on either time frame, in all fairness. So I'm taking this off. Okay. we didn't, I could probably just drag and drop it. When we get to over here, so I'll have to zoom in to kind of get a really clear picture. And we can try this on multiple pairs, okay? The actual strategy, when you know the actual strategy, this bullish or bearish candle, the 3 is crossing the current 50. This does not qualify as 2 bars. So we can't even really get in until here. Because remember, this has to close on the other side. The bears are in control, right? Momentum is up. So let's see, does this one play out? Okay, and we'll kind of go over all the different settings. So, oh, come on, silly butt. There we go. Scroll over. If we got in at the very bottom of this candle or the beginning of the next, yes. This kind of thing is where I usually get knocked out with these settings because you just can't avoid it. It's not, I want to avoid it very, very badly, but I'm not. You got to pick and choose sometimes. So definitely could not get back in this area. So I couldn't get back in. I just can't avoid taking these wick losses. In this case, it's close enough and did not move enough to knock us out. So this case, again, we won 30 pips on GU. And this is the time that we would be open. So we get our next entry. If we're going off of a next higher time frame, this is a little bit harder to see. I'm going to scroll in, turn this back off. Here we go. Very hard to see, especially with all the stuff on the chart. But this is your 3. It crosses the next higher time frame 50 somewhere on this candle, right? Anywhere on those. I'm sure somebody would be. Scott, how do you find out if 3? I know that isn't there something you do where like you can click on it or something?
What are you trying to find?
Where the 3 crosses on the other side of the 50.
Well, you're on the next higher time frame.
Yep.
That arrow.
The 3 crosses on that arrow. That's exactly when it happened.
I suspect, because your next higher time frame.
There's the 50.
Okay, so this is your next higher time frame 50.
This is my next higher time frame 3, right here.
Yep. So it looks like that's where it crossed. This was probably just ever so slightly above.
Okay, gotcha. So there's that one. Obviously, the arrows. He's proven the arrows play out pretty well. I think that's his goal right here. And he's doing a great job, by the way. But that's your next higher time frame entry. So let's see how that one plays out. If we got in, and remember, this is 15 minutes, so you don't have 2 seconds to make this decision. That's kind of nice. That's a really nice problem to have. It stinks when you have 2 seconds to make a decision, and then it's just not fun. It's not fair. It's not cool. So you don't have enough time to do anything with anything. So here's your next higher time frame entry. You got in anywhere on this candle, so I'm going to hold it here, okay? Because this is where you got the arrow. You didn't get in until somewhere on this candle. You might have gotten at the top, but this tool is going to measure you entering at the bottom. So you got in somewhere in this 15 minutes. It could have been here or it could have been here, but when this tool is up, it's going to always go with the close of the candle, right?
Yeah, well, if you are taking the signal, it would be very close to the open of that candle. So it would be closer to putting your start of the trade there. That'd be closer to accurate if you are reasonably on time. If you enter late, well, that's on you anyway.
Yes. But just so you guys know how the tool works, that opening price is going to measure the close of whatever candle you're holding it over. So the close of the candle. This is measuring the close of the candle. And again, so this one kind of gets you knocked out. I'll press exit. So this one is one of those ones where this drop was too big. The lock profit is what knocked us out. Not fun, but real life. So it kind of shows you this one, you barely got out with 8 pips. You missed the whole move. But this is where the difference come in. When I was thinking about, okay, so how are some people compounding pretty effectively and some people are not, is same move. So let me take the crosshairs off. Okay, same move. I'm going to zoom out a little bit, scroll to this way. Here's the big difference. So if you had got in even slightly earlier, okay, I'm going to press escape. Escape again. Escape. Try that one more time. So you got the signal here. If you got in here, you got 50 pips. If you got in pretty close to anywhere at the top half of this candle. So within those minutes, if you got in here, you got 8 pips. So that's a pretty big difference. One candle, 1 15-minute. So understanding your management and how you're micromanaging for better and for worse, what's happening, okay? You'll know why you're succeeding, why you're failing, why something's working, why it's not. That's a pretty big difference. One candle is the difference in 50 pips. And it's not that this was a 50 pip candle. So it's not like, oh, well, I missed the move. This is only 10, 15 pips on GBP/USD, which is not enormous. It's not small or large. It's average, right? It's an average candle for this pair, for this, setup here. So just to kind of give you an idea of what the difference is in when you know when to take your signals and when you know not to. This is your next higher time frame entry. And if you took it, okay, you would win for the most part. So let's take a look at some losses or some things that what the things we're trying to avoid. And that's when you have to know when not to trade. So make sure that's turned off. Keep scrolling. You're going to get times like this where it's a mess, where you pop below, you pop above, you pop below, and you pop above. It just keeps happening, and you're in this consolidation. So you don't know this is going to be turned into a zone when you first see this spot right here. You don't know that yet, right? You have no idea that that's what's happening. So let's see where the 3 cross the 50. I'll zoom in. Is that it? I think that was it. Yeah, that was it. So the 3 crossed the 50 on this candle. That's the current time frame kind of move. You only have one. You don't get two. So remember, you have to have that one close.
Actually above at the close of that candle. That's my guess. I think it's going to be that candle.
So 3 has crossed 50, and you need 2 bars. So this is not a bar. That's 1. That's 2. So sellers are in control. Everything's up. We're good. Set yourself for. So what would happen if we took this entry? So remember, we need the next candles to be moving in the right direction. We need that to happen. So somewhere in here, not quite enough pips. So how would we get knocked out? Well, would we win? How do we avoid this entry, et cetera, so forth? So all those questions kind of come to mind, but I'm going to go off of the assumption that you didn't know any better and you did not avoid the entry. So you didn't see like massive, I don't know why it's not letting me go back and stay there. Here we go. Let's say we didn't see massive structure to the left. We didn't see like some massive uptrend that we really knew that to avoid this trade. So if we took this trade, okay, where do we get knocked out at? So we don't have enough room to protect it. We don't have enough room to really decide on anything. So this was a bad trade to enter. And if we entered where we said, so anywhere on this candle, so I'm going to have to use this candle because I can't use that one. But either way, you closed with a barely break-even trade. So we're going to
cover pips
because it's got to cover your cost. So break-even-ish trade. Okay, that's what you ended up with. So knowing how to manage the trades that you took that were bad. So if you got in here, you got 0.5, not even a pip. If you got in here, okay, you got 4 pips. So you didn't die, even though this was not a great trade. So again, this one didn't play out just yet or give you any profit. But let's just say you did want to take the next higher time frame entry because that's how you trade and that's how you see things. We're at the zoom in really, really close. But by now you see that you really are kind of consolidating. You don't really get a clear 3 and next higher time frame 50 cross until here, give or take, I think is what most of us would agree on. And I'm going to use Scott's perfect example, and we're going to trust the arrow versus my opinion. So in here. So if we took this trade, again, not knowing that we're in this box, we don't know because we don't always know. And we want to think we know, but we don't. So how big is this loss? Let's see. And you guys can try these settings. Again, I will change them once the version is updated and the bug is fixed. But how big is this loss? This one doesn't turn out to be a loss. This one turns out to be, again, a baby profit. So you didn't die, which is kind of nice. That is a nice problem to have in general. So definitely not a bad thing to have.
And that's the stop loss that gets out. That's the trailing stop, probably a lock profit.
I think the lock profit is what gets you out on that. Because here I'll press escape. Here's how this is set up. I'll go over how it's set up, but this is where the lock profit activated. The exit manager activated here. So I don't have that turned on immediately. I'd like to have it be the trail that activates. But you can talk about the pros and cons of that when we go over on all the settings and all the other good stuff. So we will see. But that's kind of where we got knocked out.
So it's this wick right here.
That's the lock profit then, right?
Yep. So your lock profit brings your stop down to those points, and then you get wicked out right here.
Gotcha. Okay, so this, either way, you guys can see the settings and then decide how you want to change it. Maybe Scott can add some input. I do have questions in terms of trail versus exit and to see if I change it back, it's better or worse. But totally gonna have to be somebody else's advice there.
Now, I will say that the lock profit, you don't have to set that to a positive number. You could, knock your lock profit down to a slightly negative number, saying, okay, I'm going to reduce my loss to something like this, reduce my potential stop loss.
Gotcha.
So you got some flexibility where you set that.
Okay. Just an idea, guys, for those who are learning. So onto this one right here, we get our first arrow here. We don't make a higher high. The next candles don't go in our favor or in our direction, even in the next handful of candles to start taking a buy. So we're not taking that entry, and we have structure to the left. So I'm going to scroll this over. We've got structure to the left. We're not taking this entry.
And so frequently, the pound is one of the most manipulated currencies on earth. And we've got a trading range that runs through here. And what they like to do is they know that there are orders sitting down here because price moved up away from it. So they run down, they clear the orders, they run up, they clear the orders, and then they go in the direction that they want to go.
I hope you guys caught that stuff.
These kind of manipulations are common on any of the pound pairs.
Well, then I picked a great pair to use as an example. Go me. So let's take this one right here because this is a fair enough arrow, bias change arrow. If we got in on that candle, we lost 25 pips. So far with all the trades we've taken, for the most part, we've managed them well enough that we're in the black. Okay, so I like to say green or blue because it makes more sense to my money mindedness, but accountants say it, you're in the black, right? Just to kind of give you guys that understanding. At this point, even with this is the first measurable loss we've taken that actually hits any form of a fair enough stop loss, if you will. And again, most of the stuff you can kind of tweak. You can alter it a little bit to see what best suits you, etc. So forth. So we already said we don't take that trade. We'll go take this trade. So the 3 is crossing below the both 50s. This is a really great trade. So let's say we got in at this candle. Okay. Again, this is assuming you got in at the top of that candle, though, in all fairness, because remember how the tool itself works. Again, that more than almost tripled the one stop loss you've taken so far. If you got in a little bit late, okay, this is the difference. You have to understand that the difference of where you're entering and knowing what's happening. If you waited to the break of that fractal, which means you got in here, okay, did you still make money? Yeah, that one's quite a bit different, though. It won't always work that way. This way just worked that way because, like Scott said, it was manipulated and all other stuff. So if you try to do this on other pairs, for example, I'm going to turn this off so it's not so vertigo giving. Which one? US 30, German 30, or NAS? Somebody else pick a pair. Somebody else gets to US 30. Oh, that one's a beast. That one's definitely a beast. This one is a lot of pips, guys. So let's practice that on this. I need to delete these lines. Here, I'm going to go right click. I know how to do this, I think. I haven't done that in a while. So right click, objects, there you go. Control A, let's make sure we delete all of those. Close. And now we have object free, so we're just kind of going to get a feeling of all this. Same settings, scroll back. You're going to have, actually US 30 is the worst one to go figure you would pick that one. It kind of consolidated and was very wiki the other day. So we're going to use this as an example to see and test this theory to see if it works. Remember, we're not just going off of the arrows. If we don't know what gave us the arrow, we're not taking the arrow. If we don't see the clear 3 and 50 on our chart crosses, so it can be the current 3 and 50 or the next higher time frame 50. If we don't see that, we don't take it. So let's
Jenny, can I stop you there? Scott, can you just look at Jenny's screen? I've got this. Okay.
I just fixed it because I switched back and forth.
You were talking about all that stuff being missing.
Yep.
Yeah.
I've never seen that happen before.
Yeah, it's happened to me a few times. So I was just waiting to collect some data.
Change time frames?
I did.
Yeah.
I changed time frames to fix it. Sorry, when I saw it, I immediately tried to fix it. So sorry, Kat. I just stepped on your toes.
No,
No,
I
no,
was
no,
looking
it's
at
okay.
that earlier. I was just about to write a question mark there.
Okay, that was my questions.
All right, awesome. Okay, well, let's talk. That does happen kind of a lot. So we're going to keep kind of scrolling, get an idea. I don't know if I want the fractals on here because I'd want to clear it up. So fractals, I'm going to take those. Oopsie. I'm going to have to do it the smart way. Indicators, let's clean it up so we can actually see a little bit. Delete, close. So back to the same concept. US 30 bigger time frame. There's room to get a lot of pips. So just be wary. It's a little risky here, guys. But
There's room to get a lot of drawdown.
A lot of drawdown. That's right. So we're gonna find some of where our entries would be. Again, following the rules. That's what we're looking at. I don't think this one might qualify with the momentum. That one's questionable, but I think in all fairness, it is above the 25. So we don't know that it pulls back down. So when we see this in real time, it could potentially look like the momentum is going up. Odds are that's what we were seeing in and around this time frame. So let's go back. Okay, so the 3 crossed the current 50 on this candle. But remember, we need at least 2.
No, there's where they actually cross at the 50.
Okay, see,
Oh, wait a minute. Are you talking current time frame or next higher time frame?
Current time frame.
So, yeah, there, because it's kind of a straight line. It probably is sitting somewhere right about in there on this candle.
On the close of that candle.
Yeah.
Okay, well, here we've got one. Well, come on, silly butt. We've got 1 bar, 2 bars. Okay, we need 2 at least bars. We need the buyers to be in control. We need momentum to be above 25. This one's a bit iffy looking in hindsight, but we have to be fair to what we were seeing at the time. And I can't, quantify or verify, but the odds are with this momentum candle, the white line would be pointing like almost straight up. And if it was pointing up and above the 25, we would have assumed this was a good signal. So,
and that's the opening candle, isn't it?
This is the opening candle, that big one right there. Yep.
Yeah.
If we got in anywhere in here, did we win? You got 2,000 pips. Okay. 2,000 pips. If you got in on your next entry, I'm not going to turn it off this time, guys. And yeah, see how it freezes up like this? There we go. That's just could be my broker though, so I'll keep my.
The broker shouldn't matter.
Could be something. Well, I don't know what it is, so it's something. So here we get our first arrow, next higher time frame. The 3 is above the 50, and we have at least 2 lines above. If you're asking me on how my eyes see it, my 3 is above the 50. Nope, the next higher time frame 3 is here. That's happening somewhere in here. So in this one, we have some drawdown, and probably painful drawdown. So let's find out what that drawdown looks like. So if we got in at the very top, so worst case scenario versus best, that's almost 2,000 pips of drawdown.
It's almost $200 with a 0.01.
So to kind of give you guys an idea, that's how much drawdown it is. And what you made on that was 1,600 pips. But this is kind of this is the closest solution I could come up with to structure-based, trading. And this is adjusting moving structures, so it's fluid. But again, this one doesn't hit because this little spot knocks us out, which is fine. It is what it is. On this case, go figure, we do get another entry. So this right here, I don't see the 3 and the 50 crossing. So I don't see that. So now I need to investigate, why am I getting this arrow? I'm not just going to take it all willy-nilly because I feel like it. I would consider taking something like this where it retested the fast MACD, but I'm still in this trade, so I have no reason to go looking for it, right? So I would have missed this trade. By the time we get this next arrow, and on this I have alerts. So just so we're on the same page, I'll get this alert. Here's what we're going to look at. So would we want to take this trade? We're kind of sitting at structure. This is.
Well, Jenny, saying that you're still in that other trade, that was a next higher time frame formatted trade. And you also were looking at current time frame. So this would have been a neutral going back to bullish in the current time frame. If you were current. So that would have been an entry.
This would have been a bias change if you were doing current.
Right, and then a bias change back on the next candle. So you would have been neutral for one candle, and then you would have been back to bullish right there. So that would have been an arrow.
Okay, so Scott's helping us see and understand the fancy MACD. Hope you guys are catching on. Lord knows I'm trying to. So like I said, if I wasn't still in this trade, so let's say I protected it, let's say I broke my own rules, which sometimes we do. We have this trade manager running, but like I even admitted this morning, we break our own rules.
Well, what I'm saying is this isn't even a rule break because you're trading current time frame. You know, current, you wouldn't have been in this trade.
Well, wait,
or either of those two trades, because your original entry would have been back when you crossed here.
Well, remember, wait, this was right now it's measured as the next higher time frame. I'm just trying to show that if you follow the rules and take any of these entries, that makes sense. And yeah, there's going to be some +1s on that 4+4, but it works. So which one of these I'm still in or holding, I don't know. Because here's the reality, guys. If I took this trade, I'm up 1,500 pips right there. So I'm up. So would I have protected it, micromanaged it? I'm working on letting my swing trade hold come into my scalp. I can find lots of entries because it's hard to hold. Scott had asked me earlier what the difference is. I think the other problem is when you're swing trading, there's not going to be 5 other opportunities this afternoon. There's not going to be 7 other opportunities today and tomorrow. In scalping, there's 7 other opportunities to get in, and it makes it really is affecting kind of like the greed that it's affecting a lot. So the more opportunities you have to get in, the more opt you are to get in and out, in and out, in and out. So
although if your strategy is giving you 4 opportunities in a week, you know, you don't want to be chopping those off at the knees either, you know, but you're still, if everything's in drawdown, it's hard to sit through that.
It's very hard. And these ones mostly aren't in a lot of drawdown. Some of them are, but most of them aren't. Like this one was a big drawdown, but it went straight into profit. So I'm showing you guys what would happen if you took the rule-based entry. So this rule-based entry, this rule-based entry. Technically, I would consider this trade. So personally, as Scott explained it, as if you had it on current, you would be seeing a bias change here. I see with my own naked eyes that this is a fast MACD retest. We tapped the 50, right? So this is how I'm seeing this. We have this nice, we tapped both 50s crossed here actually, which is, you know, I'm not going to say that that's a signal. I'm just saying it has a value. Okay. I definitely see that. And on US 30 particularly.
Well, actually, there's an arrow you can have turned on and you just don't have it turned on right now because that would also be an arrow for the MACD.
Well, actually on some of my brokers, I do have that turned on. The fast MACD retest, just so everyone is honest, and I'm super aware.
All I'm trying to say is that it is a valid entry. So,
you know, it is definitely a valid entry. So if you guys had taken this too, my crosshairs aren't coming up right now. Go figure. This broker is kind of super lagging, but this is a gap. So this is the close of market. So either way, that kind of gaps up. You have quite a few opportunities here, but going back to kind of where our next biased arrow is. Okay, assuming I'm not in that trade anymore, right? And that you have to kind of take that assumption. Or let's say you were sleeping this time because you live in a different part of the world than us, and you're taking this time frame. You know, what happens in this trade? Notice how, because this is set on ATR, it's allowing you to catch the huge amounts of moves when the market is moving hugely. And it's allowing you to get a smaller take profit pretty close to effortlessly when the market is consolidating. So you'll notice your take profit being hit on this one is...
No, it didn't get hit. You got tagged out on that lock profit right there.
Well, fine. Notice how close the take profit is. He's right, but notice how close that take profit is what I was kind of pointing out. So you're right. That's really, really small. But you got tagged out on that part. So kind of give you an idea, but this is something that you'll notice. Notice how this right here, whatever. Okay. The take profit on this is 1,400 pips. The take profit on this move, escape. Okay. Let's see, is much, much larger. So the take profit here is almost 3 times that. Well, this is 4,600 pips. So when the market is moving a lot, it's giving you a lot of room to hit a take profit. Not to say that you will. I got knocked out on this one too. This one would have knocked me out.
And just for those who are uninitiated, the trying to come up with a color name, the aquamarine color there, that is the exit processor, which I believe Jenny has set to a short Donchian channel.
Yeah, that's right. So we'll go over all the settings, but I just wanted to show you guys this on whatever pair you guys choose. This was pretty wiki the other day, but it's possible. It's kind of what I'm trying to show you. So is to show you what happens when you stop micromanaging and you let it go. So if you got in anywhere on here, let's say you got in, I'll zoom in. So there you got the arrow, you got in on the next candle. This one, you hit your take profit. Got in next candle, you hit your, that one does not hit your take profit. See the difference in terms of where you get in? This one is 1,600 pips. This one is 200 pips.
And again, it is the lock profit that's getting you out early. So, it's going to be a balance as you decide, do you want to do a lock profit? Do you want to lock when you get up to here instead of here? It's when do you want to do it and how much do you want to lock?
And there's a lot this trade manager does. So so let's go over settings. I think I showed you two different pairs. One's an indice, one's a massively manipulated pair. I'll show you this one just for.
Notice how the same settings worked on both.
Same settings work on both is the key here. So let's say we got in somewhere on this one. Okay, fine. How much did we lose on this one? Not a bunch. We lost 200 pips on US 30 is not a huge deal. Okay. 200 pips on US 30 on the 15-minute time frame. That's not so painful that you'll die. Okay. You'll be fine on that one. So just so we're on the same page. So if we trusted this one and say we took it as a single time frame entry, exit. Let's see how many pips it went in your favor. This went a total of 500-ish pips in your favor. You lost 200 by not touching it. But notice what you're gaining across the board by trusting something versus, and there's nothing better that I could do to show you the U factor in this equation. So same thing here. This one won. Well, this one I think won. Or I got knocked out. So you won with 200 pips barely if you took it on the right candle. So does everybody understand at least what we've shown so far? Kind of get a good idea? At least understand that much?
Yes.
But again, that was the lock profit that knocked you out up here.
So Scott's pulling out the lock profit. So again, you're going to have to play with this to see if you want the lock profit. I was very adamant on not giving up I'm going to reset this a little bit so it kind of readjusts, hopefully. I was very adamant on not giving up my scale out. And I kept it for a very long time because, well, let me be honest. We get cocky, we get in our head. It was the first way I made six figures, honestly, was the whole scaling out mentality. I did it manually at the time, but that was the first way I made six figures. So I was really adamant to not give that up. I didn't want to give that up. So am I trading that, get up for this? Yes. Can you loosen this and get knocked out less? Yes, you can. Definitely not a bad idea. And you can kind of see how that works if you take that off and take it off
Or
altogether.
just change the lock levels. The thing is that this is an optimization thing. And, you have to see how often is it getting you out where you could have hit a take profit versus how many times you get out with a profit where you could have taken a big loss.
There you go. And that's a very fine line. So if you're giving up all your huge wins to avoid the 500 pip loss, you're not helping yourself. Take the 500 pip loss. It hurts, but it's fine. You won't die. So everyone who's in the German 30 trade, it's moving back in your favor. Learning how to sit through that is kind of the lesson I'm trying to go through today. If we're wrong, we're wrong. Does the stop loss hurt? Yes. But you're never going to hit 1,000 pips and finally get more than 2 or 20 if you don't learn how to sit through the market doing what it's doing. So just to kind of go over that. But let's quick go over the settings. Again, this is not Scott's recommendation. It's not my recommendation. They have been working. Scott pointed out the lock profit is a bit too much. It's knocking me out. Probably very right. It gives me peace of mind to know that on some of these other moves where it moves just a smidge, it'll lock me, and I'll get knocked out. It helps my psychology, and it might not be the most profitable way. There's many times where you can get one of my settings on a different, similar strategy, but it's set to 7 ATR, and it hits often enough. But to hit a take profit that's smaller than maybe going for the 100 or 10x ATR, and hit the whole 100% of that move, as in not scaling out and not getting knocked back with your trails and everything else, is kind of nice to actually hit your take profit. Because again, we're trying to teach you to hold on to a scalp and hold on to a intraday trade. So if you're holding on to a scalp, which is 1 minute, 5 minute, 15 minute, actually here, let's do that last. Let's go to the 5 minute. If you're holding on to the 5 minute, you're going to get a new entry. So I'd much rather have you hit the 4 times the ATR, get a new entry, than trying to hold it for 10 times the ATR, not take the new entry, plus you overprotected and have all these other psychological stuff going on in you. So there's that. But
I would also like to just sort of quickly quibble the idea of whether we're scalping or whether we're swing trading. And you're sort of defining the scalp as being something that's on a smaller time frame. However, I think that if you're hanging on to things for multiple candles, you should consider yourself swing trading on a small time frame.
Or wow, that's deep. Swing trading on a small time frame. I guess I could take that. I could totally.
Well, swing trading doesn't.
So are we
necessarily
saying
need
we
to be
are
holding
swapping
things multiple
instead of
days.
scalping?
I'm sorry, Kat, say again.
So are we saying we're swapping instead of scalping?
There you go, swapping. I can go with swapping. I like that better than swing trading on a swapping. I can do that.
Well,
So
swing trading is really trying to catch a swing from here to here, and from here to here, and we're looking at it. We're bullish. We're trying to catch a big chunk of that swing, and that's what swing trading is. And the fact that we're doing it on a 5 minute time frame doesn't make it any less swinging.
You guys can,
especially if we're trying to hang on to it to hit our take profits. Have more of a swing trading mentality about your shorter term time frame.
There you go. So I like that concept. I definitely do. Okay, so either way, we're looking to catch. He's right. Scalping means you're in and out. You're in and out. You're going for like 10 pips or less than 10 pips. It's defined in many, many ways, like everything else that we talk about. So if scalping means you're going for 10 pips or a handful of candles or less than 10 pips, 100 pips on an indice, we're trying to hold on to, a smaller time frame trade when possible. So yeah, we'll call it, what did she say? Swapping? Swapping. Yeah, okay, I like that. That's fair enough. But either way, intraday kind of trading mentality, even on this 5 minute, 15 minute time frame. And you'll notice this works, especially on the lower time frame, you really want to consider next higher time frame entries only, because taking the single time frame entry, these settings are going to be way too loose to get you in and out. So you'll notice this one wins 1,000 pips. That's great. But if you try to do the same thing, exit, okay, on, for example, this lower time frame, like if you just took a single time frame entry here, you're going to get chopped up. And then this is a choppy spot, but just taking a single time frame entry on these indices, you technically have some room to catch some money, which I talk about all the time on US 30. This one ends up to be not too big, but just know that that's not a good example. I mean, just know that it's going to be a little bit different. So you're looking for mostly the next higher time frame entries, or when there's not consolidation. So it can still work. It's just not going to work the way you want it to work. So you'll notice you're going to get knocked out a whole bunch more taking a single time frame entry. This one plays out. Oh, sorry guys, it's just going crazy. It technically plays out in your favor, but you get knocked out. So these settings are not ideal for the tiny time frame, single time frame entries. Just to clarify.
There's something that Jenny hasn't pointed out yet that is still kind of critical, is that these settings are using ATR as its measurement method. That's what allows this to work with the same rules on US 30 or pound dollar.
I hope you guys caught that.
In fact, when I came up with the name ATM, I was thinking it was ATR Trade Manager. That was my first thought about it.
I like ATM too. I like that. That's a good name, Scott. Okay, so yes, guys, this is using ATR. No, this is not perfectly optimized. Yes, you can change it how you want to. I find that it works really, really good on the 15-minute time frame. These are not the same settings I would use on the 1-minute time frame. If I was trying to scalp a little bit on US 30, they are different. The settings I would use on the US 30 on the 1-minute time frame are different. So just for the people who want to go back again, the settings I would use on the 1-minute time frame are different than these. So now that we've got that all clarified, this is kind of what I've been doing. So again, I would kind of maybe alter these two and Scott can clarify the difference, but it is using ATR, which means in theory, you could use this with your scanner trades. You could use this with your structure-based entries. You could use this with multiple forms of trading, provided you're looking to kind of catch the move and let structure be what takes you in and out. This is not rule-based like, hey, I'm going to get out because it plays around the 50. This is, hey, I'm going to trust it until I'm given a reason not to trust it. Settings to the best of my current abilities. I'm sure that will evolve over time. So this will evolve. It will not stay the same. These are just kind of what works for right now. So 4.4 ATR, I found to be good. 3.3 is a little bit small. And you guys know I like my weird numbers. So it hits all the time almost, but I'm leaving too much on the table. So I don't like that. Max slippage, I have set at 500. I'm not quite sure what that is or why. Let me just be super honest. It has something to do with the broker stuff.
So it's how much has price moved since you placed the order. So if you place an order to sell at market, it knows what the price was at the time of market. And your maximum slippage is if price has moved more than this, if you're in a really fast moving market, like let's say you are gapping because of news or whatever, that the order won't go through if you've moved more than that because your price might not be valid.
Should I lower that or change that at all? If I'm using on US 30?
On an index, if you're trading on an index and price moves so fast, it needs to be a bigger number than the default 50, I think is what it is.
So that's what I'm using. I don't take a whole bunch of credit to that or heed to that, just so you know that's what's on there. Again, back to the 4.4, it works and it works pretty well. So you can stretch this and you'll notice it gets hit. But this is just for the times where it shoots in your direction and you catch the whole move before you give any back. You'll notice, as you saw by dragging and dropping or kind of showing where my entries are, that it doesn't always get hit. But my managers help me get the most part of the move, with the exception of the lock profit, which Scott's pointing out.
Because you can set your take profit to 10 or 20 if you want to, and or don't set a take profit and let the trailing and exit get you out. Which
has its strengths and its weaknesses, because then if it hits this and turns around,
yep.
Two. Right? I have one of mine set at 7.7 and it works pretty well, but I'm still getting knocked out for the most part. And I have so many more re-entries that this is my comfort zone. So that one I'm pretty stable on. Don't see it changing. This right here, I play with quite often. This I finally have given up on scaling out. The more I mess with it, the more I see it's not cost effective. And Scott's little data down here, it really puts your, Donna's opinion to shame. It puts Jenny's thought process, in place. It really does tell Tim, hey, listen, guy, here's the deal. It puts us in a very loving, but very accurate place to tell you, we think and we feel a certain way, but this is not calculating the way you want it to calculate. So it's the most beneficial thing you could possibly see, because it puts the numbers don't lie. So that's what I'm over this. This I kind of mess with. As Scott pointed out, it knocks you out, but it also protects you. So you got to decide which one you want to be for the times where you don't want it to go all the way against you. This is those times when you saw that kind of break even.
Jenny, time sensitive piece, flip back to German 30.
Okay.
Something has changed in our trade, and that is that we have structure that we did not have before.
We have better. So you should be up about what, 20 or 200-ish pips, give or take? You entered right around here.
So we might be forming a micro double top right here.
That's 20-ish pips, give or take. So if you want to protect this trade, you can. I am going to be transparent. Last Tuesday, I missed both of my moves, and I caught, I don't forget what other pair I caught on my other account. But for my main account that I'm compounding, I need to do what works best for me. So if you guys want to protect this now, you can. You're in profit. You could have protected it back here too. I did not advise doing so. But if you want to protect this, that's up to you. For me and mine, for now, I'm going to hold this trade. My trade manager set on the settings you're currently looking at is running.
And
So-
do notice that we've got some fairly long wicks on the bottom side here. We've got a breakout. We can expect a little bit of a pullback. So this may continue and break through.
Okay. So it's up to you guys. You guys have to decide that, though. It can't be Scott's. So before you listen to just what Scott's saying, and I mean that lovingly, and before you listen to just what I'm saying, please, you guys have got to become your own trader. So see what works for you. If you want to protect it because that makes you feel warm and fuzzy, protect it. You're in profit, and that counts. You're in profit twice. So
I'm up 393.
good job. There you go. That's awesome. Yeah, because I got in one.
What's your maximum drawdown?
I don't know. I was driving actually. Let me see.
That helps.
Yeah, exactly. I had to run some errands today, so I was on my cell phone listening. 700.
How much? Wait, you had 700 pips of drawdown?
Yeah. Well, I got in early. I got in as soon as the arrow hit, and you guys were still talking, so you guys got in kind of late. Well,
So
later.
it must have been single time frame arrow.
I was like, wait a minute, what arrow? It's like, okay. Well, either way, if you got in on the 1 minute time frame, well, was it 1 minute or 5 minute?
1 minute, because I think I was down at the bottom and it went up and then went all the way. Hold on, I'm sorry. Let me take a measurement.
I was like, sweetie, I don't think you could.
330. That's where I was at. Drawdown 330.
I don't think you could have been down 700 pips. It hasn't moved.
Nope, 330.
Okay, gotcha. Well, that's what I'm going to do. So you guys have to make your own decision on if you're going to protect it. It's not a bad idea if you have a baby account and you're just trying and you're learning along the way, protect it. If you're trying to grow 50 bucks or 120 bucks and you're at that point in life, protect it and then live to trade another day. If you're looking to become a longer term, like I can handle the emotions of this, my analysis, I still think we have one more wave. I'll go to the 5 minute to kind of draw what I'm seeing. We have that double bottom, and this looks to be like that ABC kind of correction wave, if you will. So could you pull back down again before you get one more huge spike? Yes. It looks like it's stalling here. So Scott's right on that. I would have wanted to see that push through immediately. We're not getting that. So we could get one more pullback before we get the spike. And heck, it could totally reverse on us altogether. So you have to decide what trader you want to be. No hard feelings either way. But the trade, I feel like, counts as a win. You got 200 pips out of it twice. So that's fair to me. Fair. If I wasn't online with you guys and I saw this formation, knowing where my target was, and let's say I did protect this, I would take another entry here. Or even if I didn't protect it and had room, I would take one more entry in here. Once we see these wicks down here, once we see, the purple candles turn green, right? This is that retest. We failed to make a lower low. I would be taking another entry in around here.
I actually did take another entry, Jenny.
Good job.
And I'm up 732 pips.
Good job. I love how much you guys are all growing and learning. That makes me so happy. So happy. That's awesome. Good job, Miguel. Good job. Okay, well then, so there you go. Scott called that out. Thank you for being my partner, Scott. I seriously could not do this without you. Seriously. So absolutely. Okay, so then to help Scott and the trade manager and to help you guys hopefully learn to manage your trades. So here's the deal. This is what I'm doing. Again, I'm going to skip past this screen. We already went over it. Scott pointed out this has been a weakness, but it could be a strength. So play with it, decide, and you have to own your decision. Trailing stop. These two I would switch back around, but the appearance of it wasn't working properly. So you'll have to kind of take this with a grain of salt. I did have this the exact opposite. I had the trailing stop set a little tighter and to activate a little later. And then I had my exit manager to be a little looser and to activate immediately. That is how I was running it to test it for I think I did 67 trades in total to make sure to see how this was working, to be fair. but that's what I was doing. I did switch it back because right now I can't prove whether that was working or not. Something to do with the bug, not my pay grade.
And
So,
I will update as soon as we're done today.
and there you go. So trailing stop, Donchian channel. I played with a lot of the settings. I enjoy learning things. I have the skill set to not let it get into my other aspects of my trading, to where I can learn cool things and not necessarily apply them, but just know them. Something some of y'all could really use a little bit more of. But I do feel like across the board, all the stuff I've touched on this, I'm really biased to the Donchian channel on everything. I want to like some other things, but I don't like them. Probably a me issue, probably because it's not how I trade, probably because I don't see it. But ultimately, the Donchian channel across the board seems to be my favorite. So both of these are set at Donchian channel. Trailing stop are the orange dots you see. That basically means the candle has to touch it, not close. So we're going to drag and drop this to show you, to visualize kind of, press escape. Trailing stop is this orange one. You'll see that it activates immediately. So if a candle touches this area, I can only minimize this, hopefully get a little bit more of that trade. There we go. And a little bit more of this.
You can click that.
There we go.
Click this right here. Keeps moving. That's okay.
I'll click this.
Click, you just move it to a different portion of the screen. These are like quadrants of the screen.
Oh, that's cool. I didn't know that. Huh. Well, cool. I just learned something. There we go. Ta-da. That's out of the way now. So that's cool. Thank you for teaching me that. Now that that's out of the way, here's the deal. The trailing stop is set to activate immediately. Notice I did not have a stop loss. Scott is fixing it to where now we can see the risk percentage, even if we're not using a stop loss, which is very, very exciting, at least for me. But for now, you'll notice that is kind of acting as my stop loss. So if price touches here, it doesn't have to close. If price touches there, I would be knocked out of the trade. So that's how that works. You'll notice that these next orange dots that come up, it's the same color because that means the price touches it. So if price touches this, I'm out. Not closes on the other side. It just has to touch like a regular stop loss, which means also, for those of you who don't know, it means the spread can get really fat and wide, and that also counts. So if the spread comes down and touches this, you could potentially get knocked out, which is why I have this set the opposite way. But that's neither here nor there for at least right now. Once it's fixed, I will set this the opposite way just so you guys are all super clear. That is how I was running it for the 67 trades. So this right here is my lock profit being activated once I came up. Lock profit activated here and a protected 0.5 ATR. This right here, this EL is where my exit level began, because you'll notice I have that starting later. So my exit level is set really tight. I played around with the 7, I played around with the 5, I played around with the 10, I played around with quite a few numbers. I like the fact that the exit manager has to close on the other side of it, so I can keep that pretty tight and not necessarily get knocked out when some of these weird wick things happen because it didn't close on the opposite side. Now the deficit to that is, let's see if I can't find a reason how. There we go. If this happens, it's not going to knock me out here. It's going to knock me out at the close of that candle. So I'm going to say that again, because of the way the exit manager works is it's not going to knock me out when it touches it. It's going to knock me out when that candle closes way, way down here. So that is the deficit of having that exit manager being so, so tight. So you guys need to know that and truly understand that. But that is set really close to where as I'm up in profit, it can tickle it and it can touch it, but as long as it doesn't close on the other side of it, it's going to help me, run that whole trade all the way up.
However, if you look at the time, we are at, that's near our opening candle. That probably is our opening candle.
We'll kind of avoid that anyways, but just so you know, and there's going to be times where we're like, well, wait a minute, Jenny's rules doesn't work. Scott's trade manager doesn't work. If you're not trading at that 5 p.m. Eastern time zone spot, if you're not, taking the opening candle trade or like the super crazy time when we know we should not be trading, for the most part, you'll notice that these settings works, the strategy works, stuff works. So, Scott,
if you had taken a trade where this one opens up and you see things all flattening out up here prior to the open, it could go in your favor. It could go against your favor. So, if you're in that trade and if you've got a bullish bias, you think the price is going to be still going up, what you can do is you can just move your stop loss manually up to a point where you say, okay, this will get me out.
Yeah.
So that will override what you have in settings on the ATM?
Yes.
Okay.
You can always move your stop loss on your own.
So let's find a good example of that actually. So Scott brings up a good point. Here we go. Let's say we take, I can't protect. So this is one of those times where I told you, my settings aren't so good. So you'll notice this wicks above. I can't protect against that, but I don't think most of y'all can either. So it just is, it's my only solution. If anybody has other ideas, I am totally open to brainstorming with you guys. In fact, I enjoy that. But
This was actually your exit manager that took you out.
That's my exit manager again.
Yeah, see the red dot right here?
And that's okay. I want that because I want to be able to be protected. So I want that totally fine. But let's say we took this trade right here. Okay, exit. I'm going to move this now down to the lower part of the screen. And that means my trailing stop was up here. Okay. Let's say I don't like that. I'm going to drag let's put some fractals on here for a second. Peru color is fine. There's my stop loss. My entry is here. Well, I don't need to have it that close. Maybe I see some other fractals somewhere else. This isn't a good example, go figure. But I can choose to move my stop a little bit tighter than where the manager is putting it. So you definitely have that. And I do that sometimes. Mostly when there's lots of fractals in here and I don't have to take the highest one. I'm not basing it based off the structure or something. I will consider making it just a bit tighter. But for the most part, using these to test something, you need to test it without messing with it. And if you can't test it without messing it, you're not testing it. So it doesn't count. It just means you're playing. You're not doing anything effectively. You are literally doing absolutely nothing with your time. So absolutely nothing. You're spinning your wheels. But that's what I've been doing. Those are the settings that I'm using. Please try them out. Try them on a couple of pairs. Don't just look at the arrows. For the love of God, please understand the strategy. Because when you understand the strategy, you'll know what you're getting into. And even as Scott spoke today, he was talking about that retest of the fast MACD, which if I wasn't in a trade and the time of the day was right, I would totally take that trade. And he explained to me what that would mean on a different time frame. So knowing what you're seeing here and what it would mean on a different time frame is invaluable. Like it's awesome. It's priceless.
But I'm not encouraging you to flip between time frames. You should decide what you're trading and trade that.
Yes, there is a plus. I'm going to be pretty honest when I say there's a benefit to having the dual screens up, because then at least when you see a 1 minute or a 5 minute entry, you're just looking for the buy. You're just looking for the next buy. You know to avoid that the selling the wrong direction unless you see a massive amount of room. You do see it kind of clearly. But if you're not doing the dual screen mentality, I said it before early on in my SuperEZ triple arrow system days, I'll say it again. The more often we, try to use a strategy, not structure, a strategy by looking at 50 different time frames, you're just confusing yourself. You're just saying, well, I've got an arrow to buy on the 15 US 30 and it's selling on the 1 minute US 30 and the 5 minute is neutral and then the 30 minute is at a zone and the 1 hour. By then you're getting gray hairs and you're doing nothing. So
you can make it even really, really simple. If you want to run a current up here for their MACD, then if you have your next higher time frame 50 on the screen, you just say, if price is below the next higher time frame 50 in the next higher time frame, I'm bullish. If it's below, I'm bearish.
That's a solution too.
It can be that simple.
And you
can we put a manual trade on? Will the ATM pick that up?
Yes.
That's how it works. ATM does not take trades.
So what Scott just said about doing current, you can do that and you can put less arrows on there. You can do next higher and put more arrows on there, so more opportunities, as long as you know what the strategy is telling you. If you know what the strategy is telling you, you can manage them accordingly. So before we end this or ask for questions, I'm going to tell you again, my favorite 2 arrows that I like to see on here are the fast MACD cross, so the retest of the fast MACD, because it's just kind of awesome, and the bias change. So either of those two are the ones I love the most. Those are the ones that are closest in line with how I personally trade. Now, you guys might have a ton of success with something else. So I'm telling you what works for me. I'm telling you this stuff all has a value. All of those options do, but just to kind of give you a foundation to start with and then to go play and decide from there. So
I have a question.
okay, does
How often will you guys just go over and discuss what you guys like about the ATM? Because this has been very informative. I definitely have to watch the video this weekend because I was driving, running errands, but I would like to hear it more often. I never get tired of you doing the top-down analysis, and I never get tired of Scott talking about here's what the price is and this what the market is, and this. I never get tired of that because it helps me with my trading.
That's awesome. First off, thank you. That's awesome. Thank you.
And, you know, what Robert says is very, very true. And that's that, you know, what is repetition and learning, you know, learning is repetition until you get it, basically. Till learning occurs. Teaching, that's what it was. Teaching is repetition until learning occurs. And, you know, so having those reinforcements, you know, allows things to sort of percolate up more toward the surface where you can access it quickly.
Yeah, you guys are part of the reason I'm starting to get price action just because of all that repetition.
Absolutely.
And it's all variant, guys. And you'll notice that sometimes we talk about a flag formation or a harmonic, or sometimes we talk about structure or fractal. Or Scott is great at those springs. He understands breakouts like better than anybody. And that's all the YouTubes and the crazy people I've listened to. He understands breakout boxes like no other. Seriously, it's kind of awesome. So it's definitely awesome. But
hello,
okay.
I was wondering, hello?
Hey, Ronald, how are you?
Well, I was wondering if I could say something. I'm brand new to the group. I didn't know it was going to be like this, you know, full on practice. I'm on my phone mobile and I'm trying to figure out exactly what y'all guys are saying. So do you have any night classes you can take, or is it just always early in the morning?
I do one class every other Tuesday as well for SuperEZ, but these are mostly early in the morning. Well, wait a minute.
However, there are recordings available, so everything that's being discussed here, you can go back and watch it in detail later.
Mm-hmm. Do they have any classes at night? Like around 5 or 1 o'clock?
Well, I don't know where your nighttime is, but we have one at 8 p.m. Eastern time every other Tuesday, the first and third Tuesday of the month. Eastern time.
But it's not scalping, so he might want to know that.
Yeah, it's not quite the same. But these are all recorded. So yeah, this is kind of what we do. We caught a good trade. It's in profit again if you guys are still in it. I am going to take another entry if we break that zone for German 30 and just let that be my trade for the day. I might take one other today. But finding 2 or 3 trades in a day, guys, especially successful ones, some of them lose, but it's a real nice way to be. So about the ATM, I will say again, wow, my internet's unstable. It says, I will say again that many people will tell you all kinds of strategies. They'll tell you all kinds of tools. They'll sell you all kinds of coaching. They're going to promise you a rainbow and the pot of gold. And I believe in this industry. I believe in investing. It wasn't that many years ago where you had to have millions of dollars to play on Wall Street or to do any of this anyways. So this to me is awesome. But let's be honest, we see this stuff. We see somebody else post a screenshot that says, hey, I made $14,000 this week, or I made 4,000%. And then we get discouraged. We're like, what aren't we getting? What aren't we doing? There's all this emotion that goes into it. Emotion about trading and business, and then our personal issues about money, and then emotions about our own lives. Like, we don't know that what we ate and how we didn't sleep and how we fussed with our spouse or whatever else is going on in our world affects this. This is a very heavily laden mental game. This is mostly mental. I feel like all these candles mean very, very small compared to what your mentality and your emotional state brings to the table. So what I love about the ATM is you can kind of test it. So let's say you are going to listen to me, the 3 and the 50 and a couple other rules or whatever you see best. You go pick 5 pairs, go test this, and create some settings comparable or different, doesn't matter, and go back and test it, see how it works, increase your candle history, see how far back it works. You can do this in a way that says, if I don't touch my trade, and I trade the trades that here, I should have probably added this today too. Let me add this on here real quick.
And before you start up, Jenny, I just want to be clear about one thing. ATM is 2 parts. There's an expert, that's the ATM, that's what draws this. And then also this portion down here is an indicator, and that's all you need to put on to play with it.
And
Nothing else.
You don't even have to run it. You don't have to risk your real money, your real demo, or your real trades. You can test your theory in a visual way that says, if I take the me part out of the equation, okay, which you are the equation, with all due respect, I am most of my own equation in most areas of my life. You are most of your equation. Literally, you're your own creator. The Bible says it. You are, like 100% of this is on you. So if it takes the problems that you bring to the table off the table, or at least mostly off the table, your odds of success are going to tenfold. They're going to 10x, as Grant Cardone would say, that you 10x your chances of being successful. So I know that if I'm going to be looking at trades mostly only in New York, I'll go to the 15-minute time frame so we can see a bit more. And I would change the ugly boxes, but I know that I never catch these trades. I'm sleeping. So when I'm testing New York. I'll even test Asian to see kind of what's working and what's not working. I know that I don't care what happens in London because my butt is sleeping in London, and I'm not trying to be, no man is an island. I'm not trying to be an island and catch everything. I can't do it. I have to be a walking, talking, functioning adult. So I can go back and take this, follow my rules, write down my exit, my this, and test. If I took all of these trades, let's say 50, let's say 30, and I took them on these pairs, and I have an alert or a way to catch them. So you need to have some way to catch the alerts on those or catch that they're happening, right? Would I be successful? So DJ, a gentleman in the group, he's an awesome guy, just a loving husband, a cool person. He used to do stuff like this. I would give a lesson and then he would go onto TradingView and he would go back 400 trades to see if this works. He would say, I'm going to go back 400 times and say, if I caught every one of these moves, would I make money? And it just takes all the thought process out of it. This takes all the, would I make money if I followed these rules? Because the problem is we can test a strategy, any strategy, not just mine, not just Pat's, not just anybody's. And we look at it and we say, oh my gosh, I get it. I'm going to buy the Maserati and I'm going to help my mom now. And I'm going to do this. Like, I'm so excited. I can do this. And then we take the trade somewhere in New York and then life happens and we forget, we overprotect it. We miss our move. And we took the trade, but we were scared. So we overprotected. We missed our move. All this stuff happens. We took the trade. It went into drawdown. This one would have got knocked out for sure, but we miss our move. We miss our move all the time because of emotions. So if we take the emotions off the table, and this does that, this takes if we can do these rules and actually do them, it takes all the you problem off and allows you to actually do what you say you're going to do. So that's what I like about the ATM.
I just finished the slides for the first YouTube video I'm going to do for ATM. And one of the slides is what ATM can't do. It can't take trades on its own, can't scale into trades. It can't make stops wider to give the trade more room. It can't freak out when slightly in profit and close because the last 4 trades lost.
No, that's a good one. I like that one.
And it can't gloat, get angry, say, I told you, and are you an idiot? Anything that's not in your rules, period. That's what it won't do.
That's what I like about the ATM. So, Kat, do you have anything you want to add about the ATM? If she's still on here, as we all kind of hang out. I don't know. She's in Singapore, guys. So, and she works too. I don't know if she's still working right now, but.
So how long will the average training video be?
I'm going to try to keep them, within attention spans, no more than about 10 minutes. But there's going to be a slew of them. What I'm working on right now is just going to be the overview for the person who's first glancing at this. What is this? What do I want to do with it? What can it do? And then I'll start to go into detail on each of the components. And then, you get into all of the different trail methods and all the different exit methods. There'll be detailed information about that. I'll have a video just on ATR and what it is and how it's useful.
Awesome.
Awesome. So that's it, guys. Does anybody have any questions about what I went over in terms of finding a good trade, learn the arrows? Don't just listen to the arrows, learn the system and or managing it. Because like for example, right now, there's pluses and minuses to everything we do. There's always a give and take, but that trade is up 150-ish pips, give or take. It has been up now 3 times, at least 200-ish pips, give or take.
And if you're optimizing your settings, by the way, don't optimize for this without accounting for this.
This will never catch this if we blow our accounts here. So, yeah. But that's what I got. I wanted to share you guys my settings, and I wanted to show you what I had tested that kind of that middle ground, and I try to test for at least 50 trades. It was working pretty well. So I tested for 67 is the number that I continued to use these settings on, and did my best not to touch the trade. So I'm not going to sit here and fib to you and say I never touched it, because that would be a blatant lie. I'm very, very human, but for the most part, I stopped touching my trades, and that's what was working. I think there was a period of time where it wasn't doing as great on German 30 because it was just, wicking around too much for like that couple of days. And I wasn't trading German 30 too much those days anymore. And then there was a 2-day period where US 30 was just wicking around and fooling around, and it just wasn't, super great either. But other than those times, like this works, and it works, pretty darn well. That it can be optimized and it can be improved. There's always room for improvement, just so we're on the same page. This is not the end all be all. Please don't treat it as such. So those are the settings. Does anybody have any questions, comments? I was really excited to share this with you because I think that if you do this, it'll definitely make an impact. Derek, I know it'll help you on that 15-minute. Go take some gold and US 30 trades on the 15-minute time frame. You will be golden, even on the ones that are a little bad.
Oh, and the longer the time frame, if you're trading a daily time frame, it's not that big of a deal to go check your trades once a day. But if you're trading something like a 1 hour, to have to get back to your charts every hour to check on things to see if your rules are being enforced, it's onerous. It kind of gets in the way of living.
Yes. And we're definitely here to be living, not just money. Money means nothing if you're not living. So,
the reason I started this whole venture was, when I was trading the triple arrow system way back when, I would so often have gotten into a point of profit where I ended up giving it all back. It would push into profit. And then, I thought if I had a trade manager that would do what I wanted to do, but then I started thinking about things, and I wanted to have it ATR based. And, kept on increasing my idea of what this would be.
It's kind of awesome. So,
well, I'm glad you did, because when I was taking signals and it said modify, I'm asleep because I work third shift, and I just give it all back or I just lose. And I'm looking forward to this ATM taking that over for me once I learn it.
And if you perfect this, honestly, Jericho, like even the signals. Now, granted, I still want you to understand why you're taking a signal. So like it has to match rules. But if you optimize settings to work with the signals, the kind of signals that, for example, SuperEZ is sending out, you can, in theory, use this and become the person who legit takes signals. Okay, because the cool thing is it takes all the guesswork out. Like all of it's out. So like if the signals are honestly 80-90% give or take accuracy, and you have something like this that's managing it, you go take 10-20 signals a week is what I think they're popping out on average. Let's say 5 of them lose or give or take, and this manager lets you catch more of the rest of them. You're essentially on the road. You're doing whatever you want to do in life, and you're making money.
Right.
Good money. So good money. All right, guys, anybody have any questions? I know you guys get gun shy, and then you
Well, yeah, it's me again. I had got disconnected a while back. Okay, so you said it was classes at night every other Tuesday at 8?
Yes, ma'am. Yes, at
Ronald, first and third Tuesdays.
First and third Tuesdays. Okay, so y'all guys are on every Tuesdays and Thursdays every.
Yes.
Okay. All right.
And
Yeah,
there are
it seems like
recordings of
it's
all
a
of these.
lot of things. Huh?
I said
Hello?
there are recordings of all these classes.
Mm-hmm. All right.
And feel free to drop your questions in the We the People group. We're here to help.
Honestly, yeah, we have the best group of people, guys. They're not always on this call. Not all of them participate a whole bunch. I can't get to all the private messages. I'm sorry, but I need to honor you and honor my family and myself, which I'm learning. But this team is really just second to none. There's good people. There's prayer warriors. There's good morning girls, and there's seriously, there's news. There's comedians. There's brainiac, Scots, and there's our instigator, King Instigation, Mr. California. So we have so many amazing people, just kind-hearted, great, and they will help, and they will do what they can to help, along the way. So Robert's right. Ask your questions in there, and I promise you, most people step up, and it's beautiful to see the caliber of people we have among us. So it's truly a blessing. Truly. But okay, I've asked a couple of times, so I'm not going to ask anymore. So my homework for you guys is, and I'm thinking about running another challenge, hence the reason why I wanted to go over this today. I am going to run it past Uncle P this weekend, but I would like you guys, if you have not used the ATM yet, if you have not done that, I implore you to get it on your chart. I don't care if it's only the settings this weekend, but get it going, play with it.
Download the new version.
Oh yeah, well wait. So I'm going to put the pressure on Scott and say get it out, because I really want you guys to get on your chart. My homework and the next challenge I think I'm going to run is going to be something that allows you guys to manage your trade with this trade manager. So we've done a few other things. I will do a cash prize. I'm thinking about doing a slightly bigger cash prize, because I would like the winners to drag and drop their entries and drag and drop the manager to see if they actually let the manager manage it. Because if you want to talk about accountability, if you want to talk about full transparency and ownership, we are all here, some of us doing well, some of us spinning our wheels. But if we can figure out the bottom and get to the bottom of what's going on, we can help you get to the next level. We can help you see the light and cross the bridge and do all of those other beautiful sayings. So my challenge that's going to be coming up is going to be based off of using this ATM or a trade manager. Like, I will definitely promote Scott's here because it's the best that I've ever seen, but I will accept any other trade manager as well if you find it more suited to you. I don't know a lot of other great ones, but you are your own person, so you're free to do that. But the whole idea is going to be to take rule-based trades that we can drag and drop. You need to have at least 50 entries, and you need to have some form of management that you allowed it to manage without touching. So whoever has the most entries, or I don't know how I'm going to do that, or I'll have to talk to somebody and get an idea of how to measure that or quantify, the winner, because the winners will not only win a cash prize, but we'll drag and drop the entries and get kind of like that direct coaching of how do we get your account from one point to another. But I suspect, which has been the case with other people I've worked with, when you have 50 trades that are matching the same rules, there are, fluctuations in the market and variables in this. But when you have 50 trades and when you are managing them appropriately, you're very happy with your account at the end of them for the most part, or at least pleased, or at least more grown as a person and understanding. So you have much to gain by participating, not just money. I'll figure out how I will quantify it, but that's going to be the next challenge we run. So please start playing with this. These settings or any other settings that work better for you and your entries, drag and drop these, your current entries, whatever entries you have in your history. So this is a demo account. When you go to account history, you can literally drag and drop an entry on your chart. Okay. I'm going to close. I don't know if I'll be able to find it. Go figure with this messy chart. But you can even test these settings on previous times that you have actually entered something that is not
It'll be over there.
talked about. I got to delete this or I'm never going to see it. So there we go. There's the entry. Oh, of course, we bought. Remember I told you we were selling at that time? I think we bought. Well, either way, there's an entry. So we found an entry wherever it just went. So we bought here. So for example, if we had sold, it'll tell you, would this have managed it better if you did not? See how it's not working now? Oh, there it goes. So if you had sold and you did not play with it, would you have gotten your profit? If you had bought, what pair is this? When would you have got knocked out? So you'll get to see how this would have affected the trades you've already taken when you actually use this tool to its full capacity. So just another use to do that. And that's going to be my homework is 50 trades, one plan, preferably with a trade manager. So if you're still in German 30, you're up a lot of pips. Now that we've broken above that level, if you want to manually protect it, you can. If you are already in and out, that's on you. We're going for about 500 pips on this pair. Totally up to you on how you manage it, but you should be, I don't know, up 300-ish now. So
it knocked me out. Are you getting back in? You said once it breaks structure?
So it's breaking structure now. So yeah, I'm getting back. Well, right now we're also getting ready to hit. Let's go there before we jump off. So let's zoom out.
Yeah, we're getting very close to the 15-minute 50.
We're getting close to that 15-minute 50. So now we're looking for that ABC kind of corrective wave. This could just spring up and back down. So this was that final wave of what kind of I'm looking for it to complete. So if we do manage to break this 50, right, you can go down to that 1 minute to 5 minute time frame and wait for your next buy.
And we haven't gone for a big move yet. We've got 1 push, 2 push, 3 pushes up, and that might be a prelude to a big down.
Yep, that's kind of that final. This is considered Elliott wave theory. That's what this is right here. So, and I see that really well for some reason with my eyes. So now that I've finally broken above that structure, this is the completion of that third wave in theory. Again, everything is a theory. So it could go really big or it could go really small and then get this huge, enormous drop. So totally up to you on how you want to do that. But I wouldn't take an entry now.
Okay.
No, let it play. So the structure had already.
Yeah, I went ahead and got out, Jenny, but I got a total of just over 1,000 pips on that.
Wait, honestly, Miguel, that's awesome. Man, you're doing really well. So I like hearing you on the calls, and you're doing awesome.
That was 2 entries, Miguel.
It was actually 3. I took one when it had dropped and then started going back up. And then when it started dropping, I went ahead and closed that one out. And then I saw it started going back up and I took another entry. And so that was a total of 1,000 pips.
Yeah. And when price is moving up in waves the way it is, kind of moving up, moving down, moving up, moving down, you can kind of predict that kind of movement. And when you see your bottom arrow and you just break above that bottom arrow, that can be a very clean entry with a really tight stop.
Mm-hmm. Yeah, I'm definitely trying to learn as much as I can. And I mean, the first few weeks that I was on these calls and stuff like that, I thought I started seeing the patterns and thought I was getting it, and I like wiped out a couple accounts, and it was like devastating to me, and I got really scared about this. But I listened to what Jenny said, and just this is something. It's either you're gonna stick with it or you're not, and this was something that like I've tried a couple different multi-marketing things and stuff like that, and I was like, you know what, this is something that I want to stick with because I see it being a future for me and my kids, and
the thing is,
and so I'm definitely trying to learn as much as I can.
Yeah, this is all about grit. Everything's about grit. I mean, you think about sales. If you talk about multi-level marketing, it's how many no's you're going to get before you get to yes.
Right.
It's a numbers game. And, in trading, you're going to get some no's and until you start to get yeses. But if you're selling, you need to learn to sell before you can get any kind of reasonable yes numbers.
Yes, exactly.
I don't know, guys. So we talked about 2 things. I guess I'll tell you this and then we'll jump off for those of y'all who are just hanging out. But so when I first started, there was a coastal travel company. It was one of the first multi-level marketing companies I had ever done that I had actually stuck with. I didn't have the money for leads. They were selling them $20 a name. And that's just insane, especially with a 10%, you had 10% contact ratio. And from that, you might have a 10% closing ratio. So when you talk about getting no's, you're talking about, go out and getting no's. So since I knew I didn't have the skill set and I knew I couldn't compete with anybody who had skills. I had none. So I just literally 10x their numbers. And I became, one of the better ones in the company within a couple of months, within 6 months. And this is somebody who had no money and had no, I didn't buy in at the best package. I mean, I skipped out on like 60 some odd $1,000 because I couldn't afford the best package. And somebody else, I recruited somebody who finally wanted to buy and et cetera, so forth, but they bought a package that was higher than where I was at. So I didn't, qualify for that level. And like you talk about going to get no's, I literally got hundreds and hundreds of no's. I could do 200-300 no's in a day. Okay. Whereas most people couldn't do that in a week. So that's the difference in grit. That's the difference in like really pedal to the metal. I'm going to do this. Cause if your skill set sucks, you're going to have to make up somewhere else. So if you don't have the skills to go get the yeses yet, you're going to have to improve in other ways. That's kind of the whole, that's a good point though. Really, really good point. Sorry. Had to insert that because I remember those days. Not fun, but good, I guess, overall. So. Okay. Sorry, that's enough. I guess I'm in the talky mood today. Go figure what else is new. I hope you guys all have an amazing weekend. Please play with some rule-based things. Please play with some management techniques. I don't care what they are, but they need to serve you. So they need to kind of help you with your edge and help you with your weakness so we can get you to the next level. Hope you guys have a great weekend. Talk to you guys on Tuesday and all that other good stuff. Thank you, everyone.
And I will have a new ATM up in about 5 minutes.
Thank you.
Thank you, Scott. Thank you, everyone.
Thank you, everyone.
Thanks, everybody.
He's got 5 minutes. You guys better start blowing them up if he's 4 minutes. 4 minutes, guys.
Blow me up, please.